All right. Thank you guys for joining the class. This class is going to be a beginner's chart class. What we're going to go over today is what is a bullish and bearish candle. As well, we're going to identify what an uptrend is, also identifying what a downtrend and consolidation is, understanding different time frames, and also identifying what support and resistance. And if you have any questions, please drop them in the chat. I'm gonna keep it close so I don't get thrown off, but I'm gonna go over there simultaneously to make sure all your questions get answered. And can y'all please keep your mics muted? I'll keep the participant up though, so I can mute it. Okay, iPhone A. All right, so how I like to, and before I started off, one thing I would mention, if you have an extra device, if you would like to pull up trading views, so you can also watch this class, but have the charts pulled up yourself. If you're a beginner, it's always great when you're doing the things yourself or also looking at it yourself. So you can see those things. And for everybody joining, please mute your mics. So what is a bullish and what is a bearish candle, right? So a bullish candle, you know, is, excuse me, before I even start. So the reason they call it a bullish, thank you for muting your mic. The reason they call it a bullish or a bearish candle, so bulls, for bulls, is just like the animal, right? When we attack, and let me go ahead and pull the chart up. This is the bullish candles. All the green candles are bullish, but they all mean different things, right? Because they all identify with different descriptions that they have, right? Like a doji or, you know, an inverted pin bar, but we're talking about bullish candles. So I forgot to keep this up. There we go. So think of the reason they call it a bullish candle is because bulls, the animal, attack upward, right? So a bullish candle also goes upward, right? And a bearish candle, they call it a bearish candle as well because it's a bear, and a bear, when it attacks downward, right? And the reason I like to explain it that way is to implement it into your subconscious mind. Wow. Everybody that's joining, can you please keep your mics muted so it doesn't interrupt me and as well as everybody else in the class? Thank you so much. Hey, no, I'm recording. I don't want to make you the host right now. All right, so, sorry, that just threw me off. But the bullish candle, so a bullish candle opens up at the bottom of the candle, not the bottom of the wick. That's just price action, right? The whole candle is price action, but I like to call it price action at the wick as well, right? So a bullish candle opens up at the bottom and it closes at the top of the body of the candle, right? So the high of the high wick that you see and the low wick that you see is just representing the high that this candle went to, depending on the time frame that you're trading on or watching. And the same thing, the opposite, but the same thing for the bearish candle, right? What's opposite of the bearish candle is that when you see red candles, they open up at the top instead of the bottom, right? They open up at the top and they close at the bottom. And the wicks are just representing price action, just like the bullish candles, letting you know that this is the lowest that the candle has been, the price, right? The stock, the equity, or the security that you're looking at, right? I said equity. The security that you're looking at. Thank you. For everybody that's joining, can you please keep your mics muted? Right? And it's just depending on the time frame that you're watching. And I'm always going to say the time frame that you're watching because, let me see, and you know what? I don't want to get thrown off. I'm pretty sure it's going to stay recorded on my computer. So D-Riz, I'm just going to make you the host so you could just.
How can he leave and leave his brothers there unprotected and no?
D-Wiz, I'm going to make you the host right now.
No worries, bro.
All right.
Are you still able to share your screen and all that?
Yeah. And I got it recording to this computer. I just wanted to make sure we have the recording.
Okay.
All right.
That one.
Thank you so much.
Hey Moody, I put some in the chat as far as like muting people, like current and new participants.
All right.
I already
Thank
checked
you.
it out. Yeah, you didn't see me?
Okay. All right, cool. All right, so I'm just gonna run through it real quickly for anybody that could have, when I was getting thrown off or anything. So a bullish candle opens up at the bottom and it closes at the top. The wicks are just price action, letting you know the high and the low that the price went to on that given time frame, right? And then the bearish candle opens up at the top of the candle and it closes at the bottom of the candle, and the wicks are just representing price action as well. So now we're gonna bring you over to the chart. And can you please not draw on my chart? For anybody that's looking, because I will not be able to erase this, the person that's looking at the chart and was just trying to draw on it, can you please do that? I will gladly appreciate it. So when we're looking at bullish candles, dang, I wish I knew who it was.
Moody, it's Jordan. Make me a co-host, bro.
I don't know how to do it. D-Wiz is the co-host, and yeah, anybody does that, just kick them out the class. Thank you. So, because that's like really throwing me off. So, anywho.
Moody, you said the wicks represent price action, right? So the range is from the bottom of the wick to the top of the wick, or the top of the wick to the bottom.
Yes, correct.
Thank you.
You're welcome. So like she was just saying as well, that's another extra layer that you can add to it, right? We'll be talking about support and resistance here soon, but let's just say this candle right here is a doji candle. It opened and closed at the same price point. But when she was talking about ranging from the high and the low of the candle, that's what she was talking about. So that'll be the range, right, for that candle. We're on a daily time frame, so we're not going to be able to see the full picture and what happened in between this range, right? Because all it did was stay in this range. So now when we're looking at the chart, when you're looking at these candles, right, the green candles open up at the bottom at any given time, right? And I'm gonna show you this one better. This one opens up at the bottom. It does not open up at this wick, right? That's just showing you price action, that when this candle had opened up, it went down for a little bit, right? And it took out some targets to its left, and then it came right back up. And the reason it's green now is because it passed this opening price, right? Once it passed this opening price, and when I'm talking about opening price, highs, lows, and close, you can look right up here, and the O stands for open, the H stands for highs, the L is for low, and the C is for close. That's going to be the close of the candle, right? Depending on the type of candle that I'm talking about, that's going to be the top or the bottom of the candle, and then the opening would be the bottom of a green candle and the top of a red candle. And the highs and the lows, those are representing your wicks, right? So as I was mentioning, the reason this candle turned back green is because it passed its opening price again, right? And it started going up, and it gave us a little bit of wick, like, right, because it's a pin bar. It gave us a little bit of a wick, and then it closed a little under than the high that it's been, right? So for a bearish candle, let me find one with some wicks. Reason I try to find them with some wicks is because I do want to confuse you so you can have some questions, right? So right here, we have a doji, a long-legged doji, or you can simplify it, and because this is more so of a long-legged doji, you can simplify it as a pin bar, right? So this candle opened up at the top, right? And it closed at the bottom. But you got to keep in mind that these wicks are just price action, right? So even though it opened right here, it pushed up a little bit, right? And when it pushed up, it passed its opening. It was green for a second, and then it passed its opening price and turned red. That's the reason it's red now, and it's because it's a bearish candle, and it started going down, and it started coming right back up as a recovery, right? Because when I look at pin bars or dojis that started to recover, and their bodies, they're going to be small because they're dojis, but it's not in the middle, it's more like at the top or the bottom. It also lets you know that candle is failing or that candle is recovering, right? Because you may look at this candle in this way, because when the market opens, we're only going to see we're going to see the new candle that comes out, but you may be like, man, I think that we're still going to go down, only because you don't understand what this candle is, right? These candles, when you're looking at them, they're reversal. I wouldn't say reversal candles, I apologize. They're actionable signals. And they're actionable signals letting you know that this uptrend may come to an end, right? Or that this downtrend may come to an end, right? And it's not saying that it is going to come to an end, because you can find them and it can continue to travel on down, right? So that's also a good position, a good position to go ahead and take profits, right? So,
Hey,
any,
Moody.
yeah, absolutely. Go ahead.
Yeah, I got this. Might be a dumb question. I don't see how. So if the candle, if this represents, a 1 minute, 5 minute, 10 minute, whatever it may be, and the opening, right? For instance, on this bearish candle, the opening is where the candle is. It went up, price action is high, and it went down, it went low, but it closed, right? Exactly. It closed at the body. Wouldn't every candle have to open up exactly where the previous candle closed, unless there's something in between there? How can you have a candle, two candles, like what you have on the screen right now? How can you have this gap? How can you have two candles?
Oh, okay.
Exactly. How can you, like, if it closed at the top of that pin bar, exactly, and then how the hell can it open? Exactly. What happened between those two for the price to change?
So the best way I can answer that question, there's a lot of things that could make a stock gap up or gap down. It can be insider trading early in the morning, pre-market movement. It could be, well, the market's closed, so orders are not getting filled. It could have been some news, not like, it could have been some real some like breaking news that just happened or something like that. But to me, it's always volume. I don't have my volume pulled up, but it's always volume and money going into that security, right? And possibly it's a lot of things that weigh that up, right? It could make a gap up or a gap down. It can be there's always price action, of course, but there's a lot of things that weigh into that. And thank you for saying that. How I tell everybody, I don't know everything. So that's some good research that I can go do, so I can have some extensive information to be able to. But if you want to, was that, because I know you were saying something else in the beginning, was that your full question? Like basically what makes a price gap up? And then another thing that before I say that, another thing that I would add is using different candles give you different results, right? So like if I was to move this over to a Heiken Ashi candle, and these are the candles that I learned how to trade on, you will never see a gap, right? And it's because all these candles, there's a form and a strategy that you trade them like, or how, right? And the reason I say that is because, as you've seen on the other chart, there's no gaps like you've seen, right? But this kind of Heiken Ashi chart, to me, and what I've realized and did a little bit of studying behind it, is really trend trading. Is so I guess for like dummy 101s, for me to break it down for people that, and I was learning like this, that may not understand candlesticks too much, but understand trend. You know what I'm saying? So real quick before I get off these candles, you can go back test it yourself, but I do know when you see a 3 white soldiers or 3 black crows on these charts, and especially on a smaller on a smaller time frame, that's like an entry point to me. That's what I used to do a lot, right? And it used to work for me. When I started learning these candles, I couldn't do that because the 3 white soldiers play a little differently, right? And sometimes you'll get it, but it just depends on like resistance and things of that nature. But does that answer your question? And was that your whole question?
Yeah, I think it does. But even the candles you have on the screen right now, if I look at the way you were just saying, the 3 white soldier, right? Yeah, even there. So even if I look at those 3 candles that you have there, exactly. If we say that the one candle is closing, right? So let's just take the middle one where you are, right, where your cursor is right now. Let's say that one closed at the top of that, at the top there. Now we have another candle that has now just exactly, it opened lower and what other ones close. Again, there's a gap.
And there's
in-
an inside bar.
What's that?
There's really not no gap right there. Like I would have to like break it down on a smaller time frame, but that's not really like a gap, because the reason I'm saying that it's not a gap is because I'm a strat trader. I just don't have certain indicators pulled up because I know it's going to create a lot of questions. But
So are you saying that if we took this to a smaller time frame, those numbers will get closer, those candles will get closer together?
I
Hey,
wouldn't say
Moody.
it's going to be a different level. Like if I go to a smaller time frame, it's still going to open up at the same price range and everything. The reason I can't really tell you that because I don't know the answer, and I'm not going to sit here and lie to you or try to come up with a creative answer to give you. That's what my mind thinks of the answer that I gave when I see gaps ups or gaps down, and then with it opening up as an inside bar, and that's meaning that it's opening up in the middle of the previous candle, not middle, but it's just I wouldn't say middle, but it's opening up inside of that candle in that price range, in this range here. I'll draw this.
Okay, it's starting to make sense. Based on the candle that we're looking at, there's some things happening between these two. Exactly.
It's just something happened, you know. It could be news. It could be something with their fundamentals. You know, it can be insider trading. It can be an influx of money that just came into the stock. You know, when you're looking at the flow algo, you can see smart money going into these contracts, right? So those are also logical reasons on why you will see a gap up or something of that nature as well.
Hey, Moody, would it be safe to say, and I'm trying to get this understood, that those candlesticks represent buy orders and sell orders?
Correct.
And if one gapped up, that would have been an influx and a bunch of orders one way or the other. But the other thing, if you're figuring 70% maybe algos, they may be buying and selling at certain points just because, and because the candles, well, like, look, I tell you what, Moody, if you do this, if you were to take that, like that time frame, and go to a larger time frame, you wouldn't see that gap.
Correct.
Yes.
You see what I'm saying?
Correct. If I was to go to like a monthly time frame, you wouldn't see that. It'll probably be opening. You know what I'm saying? But the gap is still there. It's just a bigger time frame. I know that the gap is still there because this opened up automatically to up as a continue. I know you trade the strat as well. So this opened up automatically as a 2 up instead of a 1 as an inside bar. So there was a gap that I'm automatically, just because I understand candlesticks, I see that little small gap, right? And that's just, let me see if this one gapped up actually, because I don't have the strat turned on, but it doesn't matter because it's a past move. This one still opened up. Let me see, I could just do this. Look at the high.
Yeah, that's
everybody to learn.
Yeah.
I'm gonna put my cursor on this candle, right? The high of this candle is 428.78. The opening of this candle is 428.87, right? So is that an inside or automatically 2 up?
Hey, this is Julie. This is my first time, but when I first started trading, I had this question. So what you're seeing based on the time frame, I'm not saying you're always going to see a gap, but in general, you see a gap because it's the difference in counting it. Like you have a 1 minute time frame, right? It's the difference in counting it on the minute, because the markets and everybody's trading on milliseconds and they're showing you based on a specific time. That's what you're seeing that changing. So it's not it tracks the millisecond, but you're only going by the minute, by the day, by the month. And that's why you're seeing, it seems like a gap, and you're not seeing the open and the closing being exact as you will go across the gaps.
That's another logical reason. And I appreciate everybody that's engaging and trying to come up to, like, you know, help our members as well. Much appreciated. And with you saying that as well, dang, what was the thought I just had? I liked it what you said, and also what Ride Daddy has said is an influx of orders jumping up. And then also keep in mind that when we're trading, we don't have real time. And honestly, I feel like if you pay for real time, you probably not getting real time, right? Because the government is always lying to us. But that's just my logic. If you have any more,
if there's something to try to get close to real time, they will send you a cease and desist order. Speaking from experience.
All right. So now,
in short, between the actual time frame that we have there and it not being perfectly real time, that's where you can have those little bits of influx, right? You'd have to go down to a millisecond chart, and it would have to be real time in order for it to be truly open to close for every candlestick.
Got you. Thank you so much, bro. Appreciate it. So now we're gonna talk.
Nah, man, I appreciate you, man. I swear, I'm like that. So if there's something I can't make sense out of, I'll struggle with it. And that's where I've been having a problem reading candlesticks for like a year or so, because I didn't understand that piece of it. I needed for it to all come together. So nah, that helps out, man. I appreciate y'all.
Hey, Moody, someone in the chat named Shay, SHAII, had their hand raised. I'm not sure if they had a question or not, but just wanted to make sure
You can
had time.
you can go ahead and unmute yourselves and ask any questions that you guys would like, because I will be moving to an uptrend. So if y'all have any questions on whatever I was speaking about, feel free. What's your question, Shay?
Hi, this is Shy. What I was going to say in reference to the candles, which may make things a little clearer to see, if you go to a lower time frame other than the daily and you put extended hours on, you can see all of the candlesticks and how they open and close together to form the gap between the days. So if you're looking to see the candles, see how it stops at one price and then starts at another, and you can see it go up and down, you can see the actual price action.
Yeah, that's so right.
Yeah, absolutely. And thank you for mentioning that. And that's another reason too why I trade with my extended hours. I didn't have to put them on, because I don't trade with regular hours anymore. And it's because of this right here. And because of all these candles up till 9:30. Watch this. If I go to regular time, bye-bye. I don't get that anymore. And I need to know what's going on. Like, aftermarket is not that important to me. Whatever happens, happens. Why? Because pre-market is going to change whatever sentiment the market is trying to give. So you don't see any of that there. You just see a gap. And then 30. Let me put it back on $6. But yeah, that was also a great question. I mean, not a great question. Great input. Thank you. Does anybody have any questions? Thank you, Jordan and D-Wiz, for being in the chat. All right, so now we're going to talk about the uptrend and how to identify an uptrend.
Oh my God! Wow! Was walking up a storm.
Is it?
Yep.
Hey, Shay,
Step over your line and stop up and really step over it.
Hey, Cassandra, do you mind muting your mic? Thank you. Appreciate it. All right, so let's talk about an uptrend real quick before I bring it down to a smaller downtrend. A smaller downtrend, a smaller time frame. I'm gonna show you it on a bigger time frame, right? And just so that, where did we go? So you can start understanding what they look like on bigger time frames as well, right? Because some people may want to be swing traders, and ask me too, because I'm just gonna go on the downtrend, like what are good time frames to use for certain strategies, right? So how I identify, how anyone should identify uptrend, right? I'm gonna just draw one up real quick, and let me try to make sure that I draw it pretty good. Somebody's gonna use this. It's just, I'm a strat trader, so I'm gonna draw my uptrends where I know that my reversals are, right? And let me try to fix that. I normally don't use this one, so let me do it correctly. This is a trend line that I just used. It's a handy dandy little trend line that you can use from right here, but I like to use the ray because it just works out for me better. And when you're connecting them, you want to connect them from a lower low, right? From a low point to the highest point, but you want to connect your wicks, right? Because your wicks represent price action. It's going to let you know where price is trying to bounce from, right? So when I just drew this, and I'm gonna break it down like this because I just feel like y'all may want to know this, but I'm gonna connect it from the bottom of my wicks. I want to see, because you're gonna hear, if you watch YouTube videos and things of that nature, you want to see multiple taps on it, right? And I used to do that and try to I used to literally try to connect as many as I could and then do it like that, right? And that's like, you could do that, but I wouldn't do that. And that's just me and it's my strategy. I'm going to connect it not with bodies, but try to connect my last highest wick, higher high, higher low wick, right? From a bottom high, from a bottom low. So once I do that, and anytime you're drawing on your chart, regardless, because I'm on a daily time frame, if you're swinging or something like that, you may want to start on a weekly or a monthly, depending on how long you're swinging. Because once you draw on a certain time frame, you do not work backwards. You don't go on a daily time frame and go, this is a 10-day chart. A lot of people don't have that, but I use them. You don't want to go up higher, because now you mess up your trend and everything. You see, as I keep going, it's still kind of connected, but it's messing up my trend. It's not going to be perfect because I'm going to want to connect the bottoms of my wick, remember? So you drawing it up on a daily, I drew it up on a daily because I'm going to go down to smaller time frames to continue to show you uptrends or downtrends, right? But real quick before I do that, if you draw on a daily, right, and you come down to your hour, you can see how it matches up pretty good on your uptrend. And then you can see your bounces a little better. And that's why I draw them over there. Yes, this is the top where that reversal started happening. You got to remember, I just went to an hour. That daily time frame represents, each candle represents one day. This hour is going to represent this candle is going to the hourly candle is going to represent 1 hour of the market. And in an hourly chart, just because I traded, I know that there's 7 candles within a day, right? So you can see how it bounces. Yes, it's not that perfect because I didn't have it that perfect, but you can start, like, if you drew it up on your daily, you can fix it up on a smaller time frame, especially if you're going even smaller, right? But sometimes you could just leave it there and you can see how you get your bounces. But to how you identify a uptrend, I'm gonna come back to the daily because I do want to show you something about this stuff. It's still an uptrend, but that's a minimum right here, downtrend, right? And on a smaller time frame, it's gonna be a bigger downtrend than what you're seeing on this hour, right? So taking you over to the daily.
I have a question about trend lines.
Yeah.
When I'm charting my trend lines, like how you said, sometimes let's say I'm charting like on a weekly or daily and it looks great. And then when I start charting down, and let's say if I don't see that trend line on my 5-minute or on my hour, then does that mean that it's not valid for me to trade on that time frame?
I'm sorry, repeat that question one more time.
As I'm charting, right? Let's say I start with my day, I do 4, I do 1, and then when I go down to start trading, let's say on my 5-minute time frame, if I don't see that trend line anymore, then that means it's not valid. Is that how it works?
I understand your question. I just wanted you to repeat it so I could actually do it in real time. So I drew this on a daily and I just came down to a 5-minute time frame. Regardless of the fact, if you draw it on a bigger time frame and go to a smaller time frame, it's still going to align, right? So if you see that it's like how you see it right here and it's aligning, you know for a fact not to go for calls right there, right? Because it just broke your trend, right? So you will have, and it broke your trend. Not only that it broke your trend and fell into some consolidation, right? This is also a minimum downtrend, but all of this is consolidation. We're going to go over that in the class, right? But when I say consolidation, well, I'll go over that when I get to consolidation, so I don't be all over the place and keep it kind of organized. But does that answer your question?
So yeah, so pretty much what you're saying is that if I'm charting correctly and I'm doing my trend lines right, they should all line up in all my time frames going down.
Correct.
Okay, gotcha. Thank you.
You're welcome. And I know I said it, but you can also, as you're going down, like say I went down to my hour, I know I didn't do it, but I'll do it here. As I'm going down to my hour, and I know like I drew it off of a daily. If I want it to be a little more perfect, you know, you can just fix it a little bit, like boom, drop it down here. I'm gonna put it down here with this candle because I'm not gonna put it on this candle, even though it's a low, because it's just gonna start messing up the trend. And I want to see it bouncing off of this line. So I'm gonna keep it right there, and it's still bouncing pretty nicely right here. And you know, I'm not, because I know I drew it on a daily and there was a reversal there, even though it's in hindsight, I don't really want to fix this and put it right here, right? Because I'm an option. Because now that you fix this on your hourly, you just messed up your get out of the trade quicker, right? Like right here, you knew to get out your trade, right? It doesn't matter that it consolidated a little bit on your trend. You might start hoping like, oh, hopefully it pops back over and it starts to bounce. We don't want to hope when we trade. We don't want to trade with emotions. We want to trade what we see, right? So since it broke, you know to get out, because this consolidation on options is going to tear up your profits, right? And depending on, you know, the option that you got, whether it's weekly or 2 week, you know, that weekly is going to rip you up. That 2 week is not going to rip you up as much, but on a volatile stock, it's still going to, you know, take away your profits. If you're further out, you're more protected with you adding more capital to it, right?
And you do it with wicks or body, it doesn't matter.
I do it with, no, I do it with wicks, no body. My support and resistance, I do with bodies. My trends, I do with wicks, because I want to catch the bounce, or I want to know that it bounced, right? Like right here, I still wouldn't fix this and put it right up here and try to get that, because I understand that this is that uptrend right there. It broke out, and then it started popping right back up, right? So, and then if you keep it like that, it's like that throws you all off, because that just falls into like little head and shoulders consolidation.
Okay, got it.
All right, cool. So where was I? Okay, so identifying the uptrend, right? And I can do it on an hour too, but I just choose where's that thing? So what I like to see on uptrends are higher highs, right? Higher highs is like this candle is higher than this candle, right? This high, and look, I can say it like this, I apologize. Look up here, look at the high of the price in the candle. This was 426.84. This high is also, or not also, I'm sorry, 435.68, right? But what the reason I said also is I'm thinking too fast. Also look at the low, right? The low is a lower high, and the high is a higher high, right? So when you're seeing this sequence, when you're trading, regardless any time frame, you know that, right? The previous candle, even this one, even though it came down, it never came down and broke your previous candle, right? Came down a little bit. That's just some corrective activity, aka pullback. And then, excuse me. And then the next candle comes out. It opened up in the mid as an inside bar in the middle of the last range and broke out, right? Because the breakout is going to be the top of this candle, the high of the candle. Those are always going to be breakouts. Your previous high of any candle or your previous low of any candle. Like you have a low right here, right? And it breaks out. So when one more time, when identifying an uptrend, right, we can come down to the hourly, and let's speak about it like this, because you're going to have more candles now. So, and this is going to be more days. This is going to be from like the 14th all the way through the 13th of March, right, of this year. So one thing to keep in mind, let's say that you are swinging contracts, but you're day trading them as well, because you're trimming profits and you're taking some profits, and you might be adding back to your position, depending on your trading style, right? So one thing to keep in mind, say like you got in, I don't want to say the bottom, because a lot of people like the line say they caught the bottom, like say like right here, right? Say you got in somewhere right here, and you're getting profits, right? As you see that you're continuing to get higher highs, right, and higher lows, even though this one right here broke. Oh no, it didn't actually. It looked like it did. It was an inside bar. This one kind of broke it though, right? It broke down, but it didn't recover, right? So they were just trying to scare you out your trade. And also that's like people taking profits and a lot of other reasons why that pullback happened, right? It could have been because of resistance and candles going up there and trying to break that resistance on a smaller time frame and not being able to break that resistance. So it's pulling back to another support to be able to gain some more momentum and some more volume to go ahead and push back through. Or a pullback can also be that a lot of orders didn't get filled at that level when people were trying to buy and like setting a limit buy or something like that. And the price aggregates, it goes up and down, it never goes straight up. So it came right back down for those orders, filled them and came right back up. Right. So what you want to keep in mind is that you're continuously getting higher lows, right, from your wicks, higher lows and higher highs. Even when this day came out, you continue to print money if you were in calls, and it continued to give you higher highs, right? And even though it pulled back, one thing to keep in mind is the fact that, let's say you got in, I'm a strat trader, so I'm gonna have to get in some resistance sometimes. Like let's say I got in at the top of this candle, at the break of the top of this candle, right? And when I'm saying the top is this resistance, the previous candle, this day came out and I got in, right? Once I got in and I started making money, right? My stop loss is going to be the bottom of this wick, and we're going to make this one red so we don't get confused. The white was our entry, and the white is our entry, the red is our stop loss, right? And we also have a trend line, but mind you, keep in mind that I'm explaining this in hindsight. You're not gonna draw this trend line and see all your candles. They're gonna appear, right? Because they're gonna be new candles and they're gonna follow your trend line. So when the new day came out, that's what I was trying to explain up here. Now that we entered in and we're printing money, this is something that Jordan does very well, how he moves his stop loss, right, up on the brokerage that he's using. Once the new day came out, and let's say you chose to swing, you could have still had your stop loss down here, or let's say you just brought your stop loss a little higher because the day already closed out and you're still in profit, right? But you're using, I'm gonna be real with you, this is the stop right here because of the resistance. And every time I'm looking for any targets or any resistance and stuff like that, I'm looking to my left. I'm never looking to my right, right? So this was some resistance right here. As you see how it broke through, came, used it as support and broke straight back down through that resistance. And now it was support, broke straight through that support. And you can see these candles testing this resistance, right? So now that I put my stop loss down right here at this resistance, because I look at it as, hey, if we fall back down, we fall back to this resistance / now support, because we're over this resistance. So it's now support. Since you have your stop loss right here, now that you got in, now that the new day has started giving you data and new candlesticks as it's coming down, it never stopped you out your trade, right? You could have got scared, but one thing I will tell you is let it stop you out your trade. If your stop loss is there, why? Because you're still going to be in profit, right? And it all depends on what stock you're playing, because time decay plays a major fact. We're not going to be talking about time decay today, but we will have a class on option contracts and learning the Greeks. So since you didn't get stopped out, boom, you continue to go up, right? As that's happening, you don't want to move your stop loss too quickly unless you're, scalping or day trading. Now you have the ability to go ahead and bring your stop loss up, and you can either put it like right here at some nice support if it falls right back down, and you see that it never came down here, and you can continue to do that, right, to keep your profits. Like, let's say if you went 3 weeks out or 4 months out and you're on a bigger time frame, you can continue to do that, right, and just move your stop loss up and just add to your position on breaks of candles, right, or on pullbacks, on corrective activity. So real quick, does everybody know, before I start talking about a downtrend, does everybody know how to identify a uptrend, or would you like me to explain it in a different way? And I will be going to the 5 minute. I forgot to go down here at least, so I can start showing you like how there's minimum uptrends and downtrends and on smaller time frames. You can raise your hand, or you could unmute yourself or drop them in the chat. Let me go to the chat, see if I have any questions in here. Do you draw the trend lines first to see what the candles are doing? Yes, that's like one of the first things you want to do. Like when you want to trade, I'm always going to look at the weekly, and I'm going to figure out my trend for that week or that day. Oops, what I just do? I'll bring that back up. Yeah, like when I look at SPY, oh yeah, we're on SPY. When I look at SPY, I know that we're still on a downtrend for the week, right? And then I also understand that we went 2 up already. So we're going outside bar. And it's because it already passed this 50% retracement rule and it wants to take out its target down here. Hopefully not. Hopefully it returns back, but that's what it I'm a strat trader and that's what normally happens, right? It just shows me right now that it's biased to the downside. So your entry would be down here at the bottom of this wick, right? And then your first target would be would be the bottom of this wick, and then you'll have to go to your left, like I always say, to find more targets. So that'll be a target right there, right? And then you'll have, as soon as you take that target out, that's how you see these lines on my chart. That's going to be another target that's never been taken out. See, and that was kind of like perfect with that one. I do that one wrong, so I'll delete that one in a second. Then you got these targets, right? And that's how you know where like SPY's going, because you also know that that's a support. The bottom of that wick is a price action, right? It's a level somewhere on a smaller time frame down here, right? So once you start breaking through targets, it normally continues to plummet through targets, just like you had this target, that target. It took some days, but it plummeted straight through to take out that target, and that's when it became indecision after it took out so many targets. It's like, oh, okay, what do we want to do? The tug of war started. Bulls, bears. Okay, we're going back down. Bulls came back and gave a pin bar, right? Because that, even though it's red, it's still kind of like a bullish pin bar because it's on the bottom of a downtrend, right? But the indecision is still indecision. The reason I understand that is indecision is because that's why I have a 2-day chart. This right here is a big old doji. These are 5 days of a trading day. This is 2 days of a trading day, right? So nobody won those 2 weeks really, right? Because you see that body and this body, they're going to connect together on this time frame. You see that doji? Yeah. So it's just, you want to like make certain, but I understand that they're going to give me, I made it a 10-day because this, you see how it's higher than this one, so it's making it look like this time frame is smaller than this one. No, this time frame is bigger than this one, because this is a 5-day trading chart, not a 7-day trading chart. This is a 10-day trading chart. But they're gonna,
hey Moody,
go ahead.
Hey Ralph, he asked a question. He said, how far back do you go to the left to determine or identify targets?
As far as I need to go. So like, let me delete all of this. Right here, let's go to the daily chart so you can understand what I was saying. So let's say this is my entry. Draw, make it white. Come on, Moody. Make it white. This would be my target. I'll make it red. So I did it wrong. Well, all right, so red is the entry and white is the target. So I'm gonna go as far as back as I need to. You see how far I'm going already to try to find a target? I gotta go all the way like this. And this is the price right here. So I know I have these targets. These targets already been taken out. So I'm not gonna try to get those targets because this price action, this candle here, took those candles out. I need to get this candle, this bottom of the wick. Right, because the people, people that filled orders here, right, that were going for calls, their stop losses down here. And there's still people that have been holding, you know, maybe a year out or something like that. They're still there or whatnot. So they're going to end up getting stopped out. And then on top of that, you know, people add to their positions. But that's where SPY's still heading down. And the reason I know that is because I'm saying the bigger time frames say that we're going to the ground. You see, monthly. This is a monthly time frame, so it's bigger than that daily time frame we're talking about. Any time frame that I've been talking about, this time frame holds more weight, right? If I delete all of this, it'll show me, look, we're right. We didn't even take out target yet. We're inside of this range. It's SPY's next real target. It has so many because you have smaller time frames, but it's going to 370, 328. Prepare for that. It's already inside of this range. Look at candles. Once they get inside of a range, the next one, boom, it's gonna come take it out. This one took that target out too. It's just, it took 2 targets out. It's exhausted a little bit, right? If I pull up, I don't have it up here because I didn't want to create a whole bunch of questions, but if I pull up my RSI, right? We're at the median of the RSI. You see how we break median all the time? So that's what I'm waiting for on SPY. SPY is gonna let us know if it wants to continue to plummet. You could draw on your thing too. You could even set an alert. Let me set an alert while I'm talking. Oh dang, how do I do it with the left? See, I do it on my phone all the time. There you go. Oh, I could just set that as an alert. Hold on, that's not the alert. Save. Jesus, what did I just do? I got y'all. There we go. Let me move this so I don't end up messing something up. I just created an alert down here, right? Oh, well, it's not a, oh, it made my red line an alert. I get it. I never did it like that. I always actually create the alert. But long story short, it didn't alert me when it comes down here, right? And I only put it down here because I see that it tapped down here before, right? I do not trade my RSI. My RSI is just an indicator. It just gives me certain confirmation. What I'm going to trade is these candlesticks and price action. I really don't use indicators, but this is the only indicator that I do use. But we already broke median, so it's going to continue. It's going to continue down unless they want to just pop right back up. But I think that they're going to come take out that target, right? And now that I drew it, you can go to a weekly target and you can see, look at that target right there. That's the target I was basically trying to look for. When I was on a daily, look, when we go to the daily, that's why I say I'll go as far as I can, but I'll just go to a bigger time frame to not have to do all of this. Because it's just going to show me exactly, okay, this is my target, that's my target. Because whatever happened on this time frame, I'm going to see it on the monthly. I'm going to see it on a weekly. You know what I'm saying? Regardless of the fact if it was on a 5-minute time frame, I'm still going to see it on the daily. It's going to be in the price action of that candle. All right, so let's talk about a downtrend. The downtrend is literally the vice versa of what I was just talking about. Do y'all guys want me to show you this different chart?
Hey, I'm sorry. Hey, Moody, can I jump in for a quick second?
Yeah, go ahead.
My apologies. You spoke about the RSI. So are you using your RSI to confirm what you already are seeing in the candlesticks?
So all right, my bad. I was like, oh man, I turned on my RSI. All right, say that one more time. Am I using my RSI to confirm? Say it again.
Yeah, so well, I guess it was, maybe I can do another follow-up with it, but in terms of your RSI, I don't know, do you have your RSI set at like 30 and 70?
No, I haven't set. It's gonna be set differently because I turned it off. So oh, why is it doing that? Oh. See, my setting button's not here. Hold on, let me try to get it to pop up real quick. Right there. The way I set my RSI, I turn my the MAs off, the Bollinger Bands. I don't use none of that stuff. And then I also input. Where is it at? Where is it at? Where is it at? Oh, it's right here. I'm tripping. Sorry. I changed this to 75. And I changed the bottom to 25.
Okay, so you're doing the 25 and 75 RSI. And are you just using that to confirm what you're already seeing in the candlesticks?
Yes, but I normally use, I like my RSI for like oversold, median, and break. So I use it really for smaller time frames, really, because like when I'm day trading, I use it as well, like on a bigger time frame, but like say like a 4-hour, like when I see these, like when I see my RSI creeping up by my 50 mark, I'm swinging. You see that?
Yeah, yeah.
I'm also looking at my price action, understanding that, hey, if I break this resistance, I'm going to mirror this candle, and this bear flag right here already basically kind of pierced up. So like if I look, check it out. Oh, I drew it badly right there.
So Moody.
Yeah.
So you you trade PFE today. Can you talk about how you apply what we just discussed, the price action from the monthly, weekly, daily, into that example? Like what makes you think, what helped you to locate PFE is a good candidate to trade for today? Like sort of like apply what you just say in terms of price action, trend line, and I mean, I sort of understand the concept. I'm just wondering how we apply that into the example, like how those help me to identify this is a good stock to at least monitor or maybe entry and exit.
Okay, you asked me like a whole bunch of questions, so I'm gonna try to remember them. Real quick, talking about like an RSI strategy. If you want to learn, so I could just stay on topic of what I'm talking about, you can go to YouTube. Matter of fact, you can see my screen. You go into the Discord and you can go into mod lessons videos and poor connection loss may affect audio. All right, no worries. Hopefully my internet don't mess up, but you can go into mod lesson videos and we drop any classes that we have, and I had an RSI class somewhere up here. Going over charts. This video will help you a lot with what I'm talking about right here. I literally break down what I was just talking about on the RSI, on bigger time frames and smaller time frame, and how I used it to execute my trades using candlesticks and price action. But and to be honest with you, I can do a little trade review after this class on my PFE, but I'll be extremely honest with you. I just woke up and
no worries. I appreciate that, Moody. Like I know that, and I'm looking at the, you know, even the video, which was using, I think even from the, I guess the static picture was a 30 and 70 time frame. So I was more curious about like why you would use a 25 and a, you know, 75 time frame. Or I mean, in terms of your RSI indicator, like, and how does that play into your trading? Like,
so I've been trading for over a year. I only have, well, a little over a year. So that's my experience in the market. And I always used to trade with 70-30. And I used to get faked out all the time. Like trying to catch the break on an RSI or things of that nature. So I just moved it up higher. Because
all right. Well, that as simple as the simple answer is always the best. So that makes sense.
Yeah. That's all it is. Yeah. And see, and I'm still testing out this strategy because I just started doing it like a couple months ago or a month ago, a couple months ago, and you can still see where, you know, it still drops down. So I didn't at first. I still don't want to change it to like say 80-20 because it's still bouncing pretty nicely right here, right? And I understand candlesticks and I trade the strat. So I'll see the reversal down here and it's helping me a little more, because when I used to try to get the reversal at the top or the break or the reversal at the bottom or the break, I used to get faked out like I was saying. But like you said, simple answers are the best answers. I just try to give as much information with my experience to see if it helps anybody.
Yeah, dope. Appreciate you.
Absolutely. I'm gonna go to the chat before I start talking about the downtrend. Let me see if anybody has some more questions in here. How do you trade price action? Candlesticks. Knowing your support and your resistance. That I think that'd be the best way I can say it, right? Like I'm gonna move this, but I shouldn't. But like. And see, and even when I drew this support, I brought it down to this body of this candle. I didn't bring it down to this wick. And I was trying to find this body of this candle, but that's like aftermarket action. So I'm not really going to want it. And it's going to take me closer to that wick. If I put it on this body of the candles, when you put it on bodies of the candles, what I realized, they match up with other bodies. See, when it closed right with it. You know what I'm saying? And I still got the bounce. And that's what I want. I want the bodies, because if I get the bodies and say I have wicks right here, I get that whole wick. If I put it on a wick, look, if I put it on a wick right here, I'm getting faked out. As soon as you want to jump in because you think like, oh, we're breaking, we're going to take out these wicks soon, we're going to go up, boom, double top, reject. That's why I use bodies for support and resistance. But we're going to get to all that. Let me try to get as a target. Oh, Jordan, my man, y'all over here killing the chat. All right, cool. I'm gonna get into it. Appreciate you, Jordan, and appreciate everybody helping out. I'm gonna open the floor once I'm done with this, and y'all can ask all the questions y'all want. So, identifying a downtrend, right? So we'll just do it on a PFE. So when you're identifying a downtrend, it's going to be the opposite of identifying an uptrend, right? You're going to want to see higher lows, right? That's a high. And you can look at, when we're talking about it, let's look at the high of the price and the low of the price. That high, you see it, 56.36. Low is 54.03. Look at this high and look at that low. This high is 54.34. And as well as the low is 53.78. I'm sorry, I was just skipping thought because I was like, why not shout out my brother? If you want to understand this too, follow Jordan on this chat, because Jordan is, what is it, animal? Where's this channel? Right here. He is not only practicing, but displaying to try to show you guys what are like higher highs, lower lows, anything that he's doing, like trying to show you, hey, look, I do the same thing, I do the same thing. I'm trying to find it. Oh, I'm not gonna find it. I'm sorry. See, my days are running together. We actually did that on a full day of live, and I believe that was yesterday. And he was like, look, SPY is still giving.
Nah, bro, it's there. Scroll up a little bit.
Okay, appreciate you.
Yeah. Talking about that 561%. Yeah, scroll up a little bit. You don't see me talking. I'm like, oh, caps.
Yeah, give it a second.
Yeah, it was at the end of the day.
Yeah, it was towards the end of the day, but oh, right here, look, because he has it drawn up, right? I can't make it bigger, but and this is on a 1 minute chart, but this is when like he started. Matter of fact, it's just the thing. What I'm remembering, Jordan, is when you pulled up the chart and you said there was no reason to go for calls on SPY because SPY continued to give us higher lows. It never gave us a new high. It just kept going lower and lower with fake pops and going lower and lower. The highs that it gave never broke the previous highs, like how you're seeing right here. A high, this one didn't break, but that one broke that high, is giving higher highs. When he was trading yesterday, it continued to get lower lows, right? So if I bring you over to the chart, you can see these are the fake pops right here, right? These fake pops aren't really breaking no highs, right? It broke this wicks high, but all it did was take out a target to come right back down lower, right? So you're continuing to get higher lows, higher lows, higher lows, higher lows, right? You're continuing to get lower lows, lower lows. These are all fake pops and consolidation. Lower lows, lower lows, lower lows. And even right here on some consolidation on a smaller time frame, lower lows, lower lows, lower lows, right? And that's how you identify if I'm on an uptrend or in a downtrend. Isn't nice on a 4 hour, there's a nice big downtrend, right? On this 4 hour right here, this is a minimum small downtrend. I mean uptrend, apologize, right? Because you're getting higher highs, higher highs, higher lows, higher lows. Right here is when your setup, I'll just use this. So when you're set up, and I'm not trying to draw this perfect, I'm just trying to draw, oh, sorry. I'm just trying to draw it so you can see that you're set up. Dang, I should have drawn this one a little perfect. So what I'm trying to do is connect this to that wick right there. Since that one's connected, I don't really care about that. That's just price action. Connect it to that one, connect it to that one, right? As soon as this broke, you got a morning star pattern here. As soon as that broke your trend line, you knew to stay out, to get out of this trade. As soon as it broke that trend right there, get out the trade. Don't let it take all your profits. Don't let it take more money if you're losing a trade. And it's okay if you lose a trade. A lot of people probably get depressed or something like that. We can't win every trade. This is probability, right? And when you start getting better and better and better, and applying more discipline, it just gets a little more easier, and you're quicker at taking your profits and cutting your losses, right? Because when you first start, what happens is you don't cut your loss, you don't cut your wins, and you always cut for a bigger loss because you're hoping that it'll go up. And I understand that because I remember when I was a beginner, that's how I was thinking about it. I wanted to make $1 million. What that lady said on Jordan's lives yesterday, I wanted to make $1 million yesterday and wanted to make $1 billion today. That's what the market is going to make you feel like, right? And even when you make money, the market is going to humble you, or your setup is not going to be perfect right there. You didn't give yourself enough time, and it's going to make you feel like shit. To just be honest with you and frank, it's going to make you feel like you don't know what you're doing. You know what I'm saying? And then, since we're talking about this, you see that break right there? From the minimum uptrend, you can also see it on your RSI, hits the median, right? And you'll see that on the video that I just mentioned on the RSI. It breaks, right? Comes back to retest. You see the retest right here, right? Because the RSI is gonna play with my candles wherever I put it at. You see the retest right there, boom, breaks, right? So
would that be considered like just like a pullback where you said that little minimal uptrend, or? Yeah, where it's, how it's going mainly down and then it goes back up and then down, or no?
This is not a pullback. This is like, you can look at it like a pullback, right? Because it is, and it bounces, it comes back. But that's like, if I go to a smaller time frame, this was a downtrend in consolidation, right?
Where you have the trend line where it goes back up and then it continue and then it goes back down. So where it goes back up, would that be like a little pullback, or no, or it's just like a small uptrend, like you said, where you have the trend line
right here?
No, where you have the trend line going up, right there.
This is a minimum uptrend and this is a minimum downtrend.
Okay. So what's the difference between that and it something being a pullback?
Oh, okay, that's a great question. So a pullback to me, because this is automatically TTO. I want to talk about it.
Moody, I would consider that like a bounce, where the sellers, you know what I'm saying, the sellers were in control and they were exhausted, and then you get a bounce. So a pullback would be kind of the opposite. You would have exhaustion of buyers, and then you have a pullback because the sellers took control.
Correct. Yep. Thank you for saying that, because I didn't even think about that, because I'm trying to think of her question. But yeah, that's like a bounce, right? I just wouldn't call this a pullback. This is more so of a pullback to me. When a stock is going up, like let's say right here, it broke out, boom, it broke out. This is a pullback. And it came right back up. Pullback, comes right back, keeps pushing, pulls back. This is pre-market, aftermarket, indecision. The reason, well, I don't want to say the reason, it's just, I know I'm on an hour, but I also understand that this candle right here is on my 15-minute, and is also on, well, I wouldn't say 5-minute, but it's on my 15-minute. Because like your first 15 minutes is always like super indecision like this. It goes up, it goes down, and then it starts picking its way, right? So that's like pullbacks to me, right? So if we go to a 5-minute time frame, because we're always trading on smaller time frames, right? We just draw on our bigger time frames. We find our targets. We know where we're going from our bigger time frames. If you go to a smaller time frame, you know where you're going to, but there's just so much uptrends and downtrends, right? That you may just get faked out. So long story short, and you can see, like, since I got all of these targets, I know I didn't draw it up in front of y'all, but I got them from bigger time frames when I was trading. I can see where it's like, oh, it's just some corrective activity. This is corrective activity, right? This is a PMG enforced. But let me not start talking about that, because I'm gonna have to explain it. But this is just corrective activity, right? Triangle day out. So what, I should use this. Right? That's what it always makes a triangle. Always makes a triangle. And it does it all day, every day. It goes up, PMG, higher low, higher lows, higher lows, higher lows. One candle takes it all out, or a couple of candles going to come take it. But the majority of the time is one candle that takes it all out. After this is a PMG enforced. This is enforced right here, right? Because now it's taking out that PMG, that is corrective activity, and it always shows you a triangle. That's why Sarah and Rob calls it triangle day out, right? Because the stock normally does that all day, every day. You can just see it, even right here, like a corrective activity. It gives you like a little triangle. And those are things that I look for too. And that's like a pullback right here. Corrective activity on a smaller time frame is a pullback to me. Corrective activity on when I was talking about when I was on a 4 hour, that's going to be, even though it's a TTO, like you can see that is a TTO, right? Corrective activity. But the thing is, this is a bigger time frame. I know for a fact my 4 hour only has 2 candles for me, right? So this is one day. See, look, and look down here. It's going to tell you the day and the time. That's the thing. Right? And then this, I don't care as the day because this is going to be my after hours, right? My after hours movement. This 8 o'clock and 12 o'clock are my, this is a little bit of my pre-market, but it's the half of my day and the rest of the other half of my day. So it's only 2 candles. So that was 1 day, 2 day. So let's go to the pullback. This is when it broke. So this was the 29th right here, right? So 2 days, you're still holding those contracts. 3 days, you're still holding those contracts and it's going down to support. You're blowing all your profits from $50 all the way down to $47. But if I go back to a 5 minute and show you this, this is why it's good to understand time frames, right? Because a TTO on a smaller time frame is not going to bring you from $50 to $47. I don't know where that's at. I'm trying to find it because I drew it. So it's going to be, there it is. You see, that's not, oh, snap. Oh, delete. I keep forgetting I have my thing locked. So you see this pullback, and I'm going to try to erase all this. Let me see if I can. Yeah. So this is what we drew on the 4 hour, right? So you can see this cannot be a pullback. This is definitely, these are pullbacks and pops back up. This is pulling back from it hitting a resistance. And this is important to talk about. When you see a stock do this, and especially a small account builder, a stock that does not move $10 a day, $5 a day. And even if you see PFE like just have a great day and they move $4 a day, it normally doesn't do that, right? So when you see a stock that is a small account like this, Kroger, something like that, move, look at, this is from 47.47. Oh, I like those numbers. 47.47 all the way to 48.85. That is a big move for PFE, right? And that's why you see now that consolidation. And look, this is the 25th, and all this could have been the 25th. This, when it started dropping, dropped down to some support, bounced, caught a reversal, right? Consolidation. You could look at this like demand zone, right? Demand, rally back up. A little bit of demand, rally back up, right? Supply and demand. And you know, once you start learning different strategies, you could implement it into your own strategy that you're trading. Like I trade the strat, but like you just see me talk about supply and demand. I'm always going to see that too because I studied it. So I'm going to see supply and demand. I'm going to see everything that I do, but I'm going to implement it with the strat. Even though I'm seeing supply and demand, I'm just going to be like, okay, reverse them, right? This was a 3 bar. You could have caught the 2, 3 up. I mean, the 2 down, 3 back up, but I'm not going to want to cash that 3 because I don't trade that reversal, right? I'm going to try to cash the 2, 2 back up, the 2, 1, 2, but this is not a 2, 1, 2. This is a 2 up, 2 continuation, right? So long story short, I'm going to catch one of these reversals or I'm going to catch the reversal at the break of resistance, right? Boom, breaks resistance. Okay, cool. It's starting to pull back a little bit. Well, no, this one, I gotta see, but yeah, it does have weight. It pulled back. All right, that's what I want to look for. That's a pullback. See that wick right there? And let me, it's the best way to do it so you can really understand this. Let me get the highlighter. Oh, where was it? Right there. Let's make it bigger so I don't. Boom. So that's a pullback right there. If I go down to a smaller time frame, I'll take you to the 1 minute in a second. Where you at, candles? So this is why it's good to draw on your chart, because you see how I'm drawing this little thing on a bigger time frame and finding it on a smaller time frame so I could be able to explain something. You do this too, like when you're finding targets or anything. So that's your pullback on a smaller time frame. We broke the resistance, see, and it gave us one pullback. That's the pullback that I drew on. But since I brought it to a smaller time frame, that 5 minute time frame is going to get broken down in half, right? So, yeah. Does anybody have any questions before I go on to speaking about some consolidation?
Yeah, I had asked about the confirmation. Oh, snap.
Yeah, what's up? Go ahead.
Sorry. You can go ahead.
Thank you. I'm sorry. When you're looking at those green candles, if you're looking to get into the trade, at what point would be ideal?
All right, so let me
like where would the confirmation candle?
I know what you're asking. I'm trying to, because if I just answer your question, you're still gonna be thrown off. So look, I'm gonna just answer your question like anybody answer it. At the break of a high of your candle. So like once you break the previous high, that's an entry. But if I tell you that, that's still going over your head if you're a beginner, right? So I'm just trying to think about it. Like, what's the best way to explain it? I'm not sure if you use the RSI or something like that, right? So what you want to do, and I'm gonna talk about support and resistance, and that's gonna help you. So let's say, let me find a green candle right here. Draw some support and resistance on it. That's a little low, but you get the gist. And when I say you get the gist, is I'm just trying to put it on the body of the actual candle. That's just all. It gives, you see how it lines up with the rest of the bodies of the candles, and then you get some bounces. That's why I use it.
Okay.
Because if you use the wicks and you be like, this is just, I'm finding this, right? And I'm finding it perfect so I can explain it. But if you go for wicks, you will get faked out all the time. Like say, oh, I'm when I say going for wicks, it's like using them as support and resistance. Like you will get faked out all the time. It gives you your range and you see your range, but you're gonna get faked out a lot, right? As a beginner, right? This is gonna help you more putting it on the candles of the body, because it's gonna help you control your FOMO, right? Because when we start going to smaller time frames or whatever time frame that you're on, dang, I should have drew on it. Dang, I missed it. I'm gonna find it though.
Do you put support and resistance lines, you said, on the candles and not you don't go off of the wicks?
Yeah, I don't go off of the wicks. I don't know where I do this, but I could just go anywhere and show you. So this is the 1 minute. If you start using wicks for support and resistance, look, this is what somebody's gonna call support. I mean, it is resistance, but if you draw it up like that and say, and I'm just trying to get some levels. See, it is, my eyes doesn't even like it. It's like not trying to find, my eyes didn't even want to find a level, because it's like, bro, why are you doing that? Come back down here. I don't know. Now my eyes on the level. When I was like this, my eyes automatically wanted to come down here and find a wick or something, or come down here. You're gonna get faked out. You see how when I brought it straight down here to the body of those candles, right? Those candles met, but I'm using this candle. I'm not gonna get faked out, and I could bring it to the body of that candle, and it's gonna show me my move. I'm on a smaller time frame. I'm gonna use the body, so when it breaks that, boom, it's a wrap. I'm going. My wicks are just targets. That's the candle I want to take out, and I want to take some profits there. That's all that is. But so my support and resistance are going to be the body of the candle, because that's where it opened and that's where the price closed at. The wicks are just price action. The whole thing is price action, but that's how I'm just going to explain it. It's like, that's just price action. But anybody else got, I know some more people have some questions. Does that answer your question?
Yes, thank you.
You're welcome. If it doesn't answer your questions when I'm explaining something, please let me know because I'm not a mind reader. Find another way to explain it. My bad for cutting you off. Go ahead.
No, Moody, this is Cheyenne. One of the things I agree with you that using the bodies helps a lot with support and resistance. What I've started to learn, two things. If you draw like the box from the body to the end of the wick, sometimes seeing that zone is a little easier when charting. The other thing is, I don't know if anybody else has ever used Renko bricks. Renko bricks, you can see support and resistance like nobody's business. It's clear as day because Renko bricks is only using price action. It doesn't really use time frames, but it's strictly off of price action. And they look like Lego bricks just doing double tops and double bottoms.
You said wrinkle bricks?
Is that an
Renko.
indicator?
It's another candlestick style. So if you click on the candlesticks, you know how you have Hakanashi, regular JC candles? The next one should be Renko. Yep, there you go. And those are, yeah.
Oh my God.
That is a lot easier sometimes to see. Well, the 1 minute is usually crazy. It's not a time frame I would suggest to use it on. But the Renko bricks are based off of the ATR. And then you just adjust the size to like maybe a 10-cent Renko brick size. So a brick is formed for every 10 cent price movement that happens within a ticker. But a lot of times it's just a little easier to look at when charting support and resistance. I kind of flip back and forth between that and JC candles when I can't see certain things.
That's dope. I appreciate you telling us this. And one thing I would elaborate on this because it reminds me a little bit of Heikin-Ashis, but it's completely different than Heikin-Ashis because I'll bring it to the Heikin-Ashis. One thing I would tell you though, this isn't correct. The price action, if that makes sense. The reason I say that is because each candle, as you see, is opening up at the top of the next previous candle, right? You barely get a candle that opens up in the middle or anything. If I bring you over to Heikin-Ashis, these candles open up at the middle. This is not Heikin-Ashis. I actually like those candles. Those are candlesticks as well. I use them sometimes. Oops, going to the wrong thing. No, Heikin-Ashis, Kelvin. Maybe. All right. So, you see how Heikin-Ashis, they always open up at the middle of the body of each candlesticks, right? And that's the reason, to be honest, I didn't even notice this when I was trading because I was so new. And D'Angelo, D-Wiz was like, yo, Moody, you a beast on these charts, bro. Stop using that. And I'm like, what are you talking about? He was like, that ain't correct, bro. It's just, what? He's like, bro, look where the price is opening at. That price did not really open up there. You know,
it's like an average.
Yeah, and that's why.
Yeah, it's an average of previous candles. Yeah, I like Hakanashi because it helps you to stay in a trade a little longer. And the same thing goes for Renko, where it's kind of similar. The only difference between Hakanashi and Renko is that Hakanashi takes an average of the candlesticks versus Renko, which literally the only time a brick forms is if it closes above or below whatever you set your Renko brick to. So most of the time I'll set it to like 10 cents. And so your Renko bricks won't form until it gets 10 cents above the previous price.
Gotcha.
Yeah, it's a little different. It's nice to have. It's a nice little cheat, but yeah, I know most people use JC candles in Hakanashi, but just another way to kind of see a little clearer how to chart support and resistance from my point of view.
No, yeah, I appreciate it.
Maybe to see the trend.
Learn. Say again.
Maybe they'll help you see the trend better.
Sometimes.
You muffling. All I heard was trend better.
I was saying maybe it will help you see the trend better.
Yes, correct. Yep. Is exactly what she was explaining. Heikin-Ashi and Renko helps you see the trend better, correct? And what she was saying, like when you have it pulled up, I'm saying it's just psychological to me. You can see that it'll help you stay in your trade a little longer. Because you're like, oh no, it's just a little corrective activity. Maybe give me a little bull flag, right? Bull flag action breakout. This just looks so cool to me because it reminds me of, I think it's Pac-Man. Yeah.
It always reminds me of Lego bricks. That's how I'm teaching it to my daughter.
Oh, that is so fire. Yo, you just made my day with that. What? Stop playing with you. I'm big on wanting children to learn this. My nephew's coming back from New York to live here and graduate. Yeah, I'm gonna be really hard on him to learn this. He has no choice. I'm his uncle, so he has to learn this.
Hey, Moody, Mr. Key has his hand raised. I think he got something to say.
What's going on, Mr. Key? Because I was about to read this question, Mr. Key.
How you doing, Moody? I just want to first off say that, man, this class has just been crazy. I'm green, like I'm like just getting started, and I mean I'm following what you're saying because I've dealt with charts before because I learned Forex a little bit, so I've dealt with the candles and the charts and everything, but you know, the resistance and support lines and all that different kind of stuff is different on this side. But I wanted to ask, being a beginner, what should I be focusing on first, like just getting started?
To be honest, you want to focus on 2 videos. I got you right now. Where would it be? Maybe stock training. She dropped them in stock training. She also dropped it somewhere else. Hold on. Discord going super slow for me. Oh, don't start right here, but this is what you want to learn. JJ dropped a ton of information on just price action and getting to understand what price action is. But watch this video third.
And you said that's in stock training?
Yeah, if you look at the screen, it's right here in stock training under education. You go to stock training.
Okay, yeah.
It's not in stock training, it's over here. I found it. I know where it's at. But I'm glad I went over there. Oh, it's right there too. So go to weekly home.
Weekly home. Okay.
And start right here. Watch this video. I'm actually put it on my YouTube channel so y'all could go there and watch it. But you want to watch this video. Is literally this chart class that I'm giving, but is more extensive, and he's breaking down each candlesticks and what each candlesticks mean. You know, I can go over that too. But basically that's what it is. This chart class that I'm giving, but with more information, letting you know different setups, letting you know he goes over everything I'm going over now, and patterns, setups, and things of that nature, and like breakouts and supports and resistance. He talks about it all in here. This is one of my favorite videos. This is the video that made me start understanding candlesticks, understanding Japanese candlesticks. Once I watched this video, I made my wife watch it. And I was like, come on, you need to learn this too. But definitely start at this video, and then start with, once you watch this, watch, I think it's in here somewhere. She dropped it. I just don't remember what channel she dropped it in. Right here. Watch the option Greeks. This is what's gonna let you know how much money. It's gonna let you know about your Greeks, and your Greeks are gonna let you know how much money you're able to make. It's gonna let you know the risk that you're taking, how much money you're able to lose. And once you know that alleviates some FOMO and emotional trading, because now that you know that, you connect your portfolio size to that, right? Knowing, okay, I have $1,000 account, I have a $10,000 account, I have a $5,000 account, I have a $500 account. So now that helps you decide on what moves you want to make. I wouldn't say it'll help you decide what stock. Your portfolio will help you decide on what stocks to trade, right? You know, if you don't have a huge portfolio, you're not wanting to trade Tesla. You know, if you got a $500 account, you don't want to put up $230 or $250 or $300 behind one single trade, because if it goes the opposite way, you know, you're setting yourself to blow up your account, right? So like, say if you had a $500 account, you might want to trade PFE. You seen how cheap those contracts were, like $35, $30, $33, you know, depending on what strike price you go with. Now you can You can over leverage if you want. I wouldn't recommend that. But, you know, if you have a $500 account and you trade in PFE, you could get you about like 3 contracts. That's a little still over leveraging, right? Because let's say the contracts were at, it's not that much over leveraging, but let's say the contract was at $30 and you bought 3, that's going to be 90, right? So let's just say if you lost those $90, you still can trade tomorrow, right? With exercising risk management, you won't lose those $90 if you're disciplined, because let's say you go down 20-30% and that was your stop loss on those 3 contracts, you're going to get out and you're not going to lose the whole $90, because whatever you put into an option contract is what you're able to lose. So if you put 100, you can lose 100. You know what I'm saying? Like if you put up 100, you can't lose $105, right? That goes into like margin, and then that goes in. It can happen on a cash account, just depending on the brokers that you're using. Like if you go negative or something like that, due to fees. But yeah, hopefully that answers your question. I would definitely start with that, and then also we'll pour into you. Go to the general chat. Where is the general? Go to the general chat. Go to the pin messages right here. Scroll down and find this. No, this one right here. Nope, it's not that one. I'm a liar. Hold on, right here. It has a whole bunch of YouTube videos, like in order. Let me jump to it.
You said that's general chat,
Yeah,
and it was something else after.
Yeah, you want to go to the general chat, and if you're looking at the screen, I'm literally walking you through it. You go to the general chat right here, and you click pin messages right here, and you scroll down until you find a post that I made with several YouTube videos right here that you're going to see a whole bunch of links. You want to click jump. I already did so, right? And it'll bring you up here, and it'll give you all the YouTube videos in order that I dropped. And this was like after a chart class or something. Like, well, my boy, I just seen Fly Daddy. My boy, he the GOAT. But whatchamacallit, yeah, I just dropped. I was just like, don't watch TV, Facebook, whatever. Just lock in. You can watch all these videos in a day, right? And these small videos, watch them like 3-4 times back to back, or like watch this one and watch this one and go watch this one, because you're gonna notice that you missed a whole bunch of stuff that she said, right? It's just like reading a book. When you read a book, you miss a whole bunch of things. You interpret it, but you miss a whole bunch of things. Your second read, you learn something different. It's like reading the Bible. You just learn something different every single time you read it. But yeah, I would say go through these videos, bro. It'll definitely help you right there. And I forgot to drop that one, and that's why I was like, oops, I did that. But yeah, definitely watch this one and that other one. Let me go into this chat. And if anybody wants to unmute your mic before I start talking about consolidation, go ahead. I'm trying to scroll back up, asking a question.
Yeah, I just want to say, yeah, this Dennis Moody. But yeah, man, definitely those candlestick videos, like definitely watch those joints like 10 times. I watched 2 days worth of candlestick videos, 48 hours straight, back to back, all different candlestick videos. And then no lie, I mean, this is not like, you know, don't expect this, but after watching candlestick videos for 2 days straight, Monday morning, yeah, I got a bag off the 1 minute chart, like no indicators, just price action, support, resistance, volume. But the candlestick video it just blew my mind. You can trade strictly off of, if you know, candlesticks, like that's just real talk. And I only been trading for 3 months. So, you know, I'm nowhere near like these guys, but like watching those videos, those candlestick videos, like Moody was saying, just blew my mind. Like I just saw the world in a different type of see charts differently, bro.
No, Dennis, you don't say that. You are on our level, right? Because there's a reason why we're connecting, because we're riding on the same frequency. We're engaging in the same energy, right? So like what I try to tell people is, somebody that is here or that is great, you don't want to be like, you know, I'm not on that person's level. Yes, you are on that person's level. All you have to do is continue to put consistency behind it and receive the information. So, bro, you're already there, bro. Like I promise you. You said 3 months and you killing charts like this. You remind me of me. I remember my 90th day. I ended up.
I appreciate it, bro. But yeah, definitely, man. Candlestick video was like 2 days, no Netflix, no nothing, just straight candlestick till you dream about them.
For sure.
iPhone said, "Hey Moody, if only the body of the candles, if only the body of the candle should be considered for support and resistance, doesn't that conflict with the strat, which doesn't include the wicks?" Yes, it does. I'm just trying to teach people, the beginners, of charting and candlesticks and price action. That's why you don't see me with my strat on, because you're correct. That is going to conflict everything, because in the strat world, we don't believe in support and resistance. I do not believe in support and resistance, but I cannot tell you that because it's going to confuse you, because that's also how I learned support and resistance. But in the strat world, that does not exist, because resistance does not break. Resistance is something that we cannot get passed over. Support is like the ground that we're on. You cannot fall under the ground. So in the strat world, that's why you hear us talk about price action and targets, because we only have targets to take out to the downside or targets to take up to the upside, right? If this was resistance, why did we break resistance and now it became support? That does not make sense in the strat world. In the strat world, we also do not talk about patterns, because patterns do not matter to us, right? But these are all real things. They're just strategies, right? But then when you do start learning more about the strat, you start to understand that support and resistance, all this stuff that we're is in the strat. If you don't mind, appreciate y'all.
Hey, Moody.
Yeah.
I tagged you if you still wanted to show, because I'm teaching it tomorrow, but I don't know if everybody's going to be able to join. But I tagged you in my channel of that picture, the screenshot from when we were on Zoom.
Yeah, I still got support and resistance to talk about, and consolidation.
Yeah, we got a lot of stuff. No, you got to scroll up, bro.
My bad, bro. I'm so sleepy right now.
Sleep.
I know. I don't even know what that means no more. I just understand the feeling and the emotion.
Yeah, tap that attachment right there.
Oh. Wow, there we go. See, so when we were trading live, Jordan came back and he was like, "Hey, look, guys, you know what I'm saying? I'm not understanding something. Why y'all want to go for calls when SPY is not giving us any higher highs?" You see, and he circled all them while we was on the live. He's like, "Look, higher low, higher low, higher low, consolidation, higher low, drops, right? That's like supply and demand, right? Because it starts up here, rally down, demand, rally, or supply. I'm sorry, rally down, supply, rally down, supply, rally down, supply, rally down." But like how he was saying, is higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, and these right here, right? He's just trying to show you lower lows, lower lows, lower lows, lower lows. I think he got tired of like kind of explaining it. He was like, "I got the gist." But yeah, and that was a perfect trading day as well for puts, and then you can look how dude's an animal. He made me do it today with PFE. Why do you think I went for calls and then puts and then said I had a problem? But you can see like those days he was going for puts. I forgot, I don't know which one they were, but puts, and he went for calls those days as well. But he only went for calls on a quick scalp, right? Because he had the advantage of understanding the 1 minute, right? And how to trade it. He understood support and resistance. I drop to support, buy. Go back up, hit resistance, sell, and just keep doing it, right? And the thing is, since I have it like this, all you have to do is just draw more. There's going to be more as you go up. That's support right there, as you see, right? And I'm drawing off of bodies of the candles. So don't let all this, that's just price action, accumulation, breakout. Yeah, so Jordan, you wanted me to go in a little deeper on that, or?
No, bro, you were just trying to find it earlier, so I just wanted to share it so you can see it.
Yeah,
but I'm teaching it tomorrow, bro. You ain't gotta take my class, man.
Real quick, Moody.
I love
Oh, go ahead.
Go ahead, I'm listening.
Okay.
You said, because I'm just learning this strat, you said that you wouldn't put support and resistance lines on that. So can
No.
you explain that again, and how you you know, kind of combine the two?
Yeah, so no, I didn't say that. I still use support and resistance. What I was trying to say was, in the strat world, they don't believe in, well, I'm gonna say we, because I'm in the strat, right? They don't believe in support and resistance. And it's just because we're going off of price action candlesticks. We're just going for the next candle, going for the next candles, going for the next candles, like our targets. Like, say if I believe that this is going to keep going down and I'm stratting, I'm not worried about support and resistance. I'm worried about taking that target out, taking that target out, taking that target out, and taking this target out. You see, and that's some resistance. You see how I just skipped over that, but that was subconsciously meaningful. But that is some resistance / support. But I know it's there, and I trade it, and it's hard for me to forget about it, right? And that's why I don't want to learn any other indicators. I only like to trade naked candles, and I only use the RSI. It's the only indicators that I use. Like, Jordan is able to say that he doesn't use indicators, you know, because he doesn't. Like, he may have some, like, because we all see that there's 7 indicators turned on, and you see these are indicators, but that's not like, that's just showing higher high, where your next pivots were, or your lower pivots. You know what I'm saying? So like, that's why I be laughing when he be bragging about he be trying to get at me with the no trends, no indicators, you know, because he understands. I could say I don't trade with indicators, but I do have my RSI on, so I'm trading with an indicator. You know what I'm saying? He chooses when he wants to use an indicator. So, you know what I'm saying? I'm always gonna give flowers to go people like that. Like, that's just dope. Go to any trader or anybody, you'll see like all it is. This throws me off. Like, you'll see a whole bunch of lines, a whole bunch of support and resistance. And it's just like, that's cluttering my chart already. That's like me trading with an EMA. I'm learning how to use them. I've learned how to use several of them, like the 20 and the 50. Well, I learned how to use all of these, and I learned their formation, how, like, what I'm seeing right here is reversing back up. Even though it's pulling back, this is reversing back up. This, oh, it's already doing it. These candles are going to come retest this 20. And when it retests this 20, it's going to pull back up, right? And this one already did it, right? Because it's already, we need this under our, this is the formation right here. Blue, light blue, orange, red. Check you out right here. You see the form, you see, these are all the crosses. I don't know how to, I cannot explain these crosses, but I can tell you what cross needs to happen first. And that's just from my back testing. But you see how blue, light blue, and you see how it keeps going on that uptrend. And then when it broke, it's because you're getting all these crosses. The red crossed the 50, and it crossed a whole bunch. It just never crossed your 200. So that was good. And then it retraced from there. But you can see how it came back and crossed 150, boom, right? And the 50, oh, it never crossed your 100. So it's still even bullish. But yeah, so let's talk about some consolidation. Consolidation. I'm gonna go from a bigger time frame to a smaller time frame. Do y'all want me to do this on a certain stock? Yes, no, no, yes. Okay, I guess I'll just pick one.
Yeah, look at
you know what, Moody? How about Costco?
You might as well say, Moody, what?
No, I said, how about Costco in terms of the stock?
Yeah, it don't matter. I do them both. All right, cool. So consolidation, real quick. I'm trying to find some consolidation here on daily. This is consolidation. Like, this won't be consolidation. This is still a downtrend, right? This right here is consolidation. And it's I'm gonna do this Costco. No, Costco's a big stock too. But I'm gonna do it on Costco. It doesn't matter. But I do want to do this on a smaller account so you can understand, because this range is gonna be huge, right? This is 880 all the way to 937, right? So even though it's consolidating, that is a huge range for it to be consolidating. There's a lot of money to be made there, right? So don't let what I'm gonna say to you guys confuse you. Let me pull up another chart so I don't forget. I'm gonna pull up just remind me to pull up Costco, bro. Pull up Kroger over here because Kroger is a smaller account. And what I mean by that is like, watch me find some consolidation here. Oh, I'm on the 3-minute. That's why. Like, why can I see that? That's like consolidation right there. But that's like aftermarket probably. No, that's the market being open. I'll redraw my Kroger chart. I'm trying to find some perfect. Oh, there's consolidation right here. Trading sideways. So remember uptrend? The dummy way to say it is, oh, it's on an uptrend because it's going up. It's on a downtrend because it's going down, right? But we know it's higher highs and higher lows. Downtrend, higher lows and lower lows. Consolidation trades sideways. It doesn't go up, it doesn't go down, it trades sideways, it ranges. It either ranges or just trades sideways, right? So going back, where did I find that little nice little, oh, right here. This is still pushing up, but this is consolidation. And I'm gonna show you where. It's just, and I'll erase it, it's just this part, that's consolidation, right? This is still considered part of this consolidation, but now, well, I'll draw it from like right here. Delete. I don't want to confuse y'all now. Right here. So like right there, this is all consolidation. Right? This is playing inside on a bigger time frame. All these candles are inside bar. They're playing inside of a bigger range. As you see, these candles right here, it never broke out of those candles ranges. It broke out right here and then still came back down. But so consolidation, is basically the price. I was gonna say the price consolidating, the price trading sideways, right? Is really not going anywhere. This is a trade you do not want to be in unless you know how to scalp. The reason I say that is because you will blow your account. You will lose money if you do not know how to trade and you're trading in, here, let me draw the lines real quick. And you're trading into some consolidation. You will want to wait for the break, right? And I will also show you how you trade consolidation. You trade consolidation like support and resistance, right? Now that I'm bigger, I'll put it down here. I'm not going to use my wicks. I'm going to use the body of this candle. And you know, you could have used the body of these candles right here. You know what I'm saying? It's however you was looking at it, but I was just looking at this period of consolidation. So I was going to grab it from down here and then bring it a little higher right there on top of these candles, the bodies of the wick. And you see how I'm going right here, and you can see how it's aligning perfectly with the breakouts, right? So the way you trade consolidation is understanding what your support and resistance is, and that's how I just drew my support and resistance. But we're also going to go over drawing support and resistance on different time frames, right? So when you're seeing this consolidation, you want to trade this as a range. You can also look for patterns as well that can help you see bullish or bearish sentiment, right? As we see, this is like a falling wedge right here, right? But me being a strat trader, I'm gonna, of course, remember, look at this like a TTO, right? A triangle day out, triangle day out. So that's what I'm gonna be looking for a lot in consolidation, triangle day outs, right? Once I see like a triangle forming, like, okay, we just like, let's say, oh, it is, oh, I'm on an hour, that's why, okay, cool. So we opened up like right here at 9 o'clock. Boom, we come down, we hit some support. And you can also see a support back here. We hit some support, we take out some targets, and it comes back up. Once we hit this drop and I see this reversal coming into play, this 2-2 reversal, I'm jumping in, right? And if I don't jump in, I'm gonna get in on a continuation on a break of this candle. And the reason why is because I know that we just hit some support, and now I got an actionable signal with Doji. And also I can simplify this pattern that I'm seeing right here, this 3 candle pattern, as a morning star, right? So now that I'm seeing like a morning star, and I'm also seeing that we also took out some targets that, well, this one didn't take out no targets. I apologize, because this target would have been down here and never took it out. So since I do see indecision, I'm seeing a doji at the bottom of a downtrend, right? That is indecision, letting me know that this downtrend can come to an end. And this is why I say you want to learn each one of these candlesticks. You only see me talking about certain candlesticks because they're actionable signals. But if you ask me like, hey, what is this candlestick? I'm gonna just let you know that is a thing top, right? But long story short, this is a doji, also a morning star pattern that I'm seeing, and also a reversal, a 2-2 reversal in play, right? Because I'm a strat trader, and I'm only going to talk about it because I see it. That's why I turn it off, so I can see other things and tell you about other things. But if I see that reversal, that's what's going to make me jump in, right? But I'm gonna keep it on because we're talking about how I trade and how I'm gonna trade this consolidation. So jumping into that reversal.
Jones, stock up with Jones. Let's go to this camera so I can make sure the audio.
All right, thank you, bro. I'm gonna jump in at the break of this candle, and the reason I'm going to jump in at the break of this candle is because I'm a strat trader, and that is my entry. My entries to calls or my entries to puts are always going to be the top of the bottom of the top of a wick or the bottom of a wick of the candle, right? And notice that I'm saying wicks and not bodies, because now we're talking about the strat, and now I'm talking about entries and exits, trading consolidation. So I'm not worried about the bodies of these candles because I've already drawn my support and resistance. That's on the body of the candle, right? So long story short, I'm gonna get in on this reversal because that's my entry. Or if I was being too scared, because I'm gonna be honest with you, hey, I may be like, man, I don't know, let's see if it's gonna reverse, and I was not being as confident that day, then I'll just wait for the 2-2 continuation, right? But I'm on an hour, depending on the time frame that I'm on. I could be on a 5 minute because I'm gonna enter in on a 5 minute or a 15 minute or a 3 minute. And now that it's exposed, I'm also going to be entering in on a 1 minute. That's just, I just love that time frame, but I don't like to talk about it too much because I don't want to mess nobody's psychology up. And that's only because it's psyche up. That's only because it messed minds up. But everybody is different, and I do not want to put my fears on you. So please try it out. Long story short, though, yeah, I would have entered in on one of these candles, and I would have took it up to a resistance. But I also will draw my targets for myself so I can know where to be getting out of my trade. So if I entered in right here with the white, and then I need targets, right? I know for a fact to take out that target because it hasn't been taken out. I'm not going to go for this target because this candle already taken out that target, right? And I'm also going to want to take out that target, right? We're going to want to go all the way. See, I was going to teach you a trick. We're going to go all the way to the top of the resistance, right? These are all the targets. And just because we draw targets does not mean that we have to wait for that target, right? So do that. So now that we know that those are our target, oh, let me show you the trick that I was going to do. So also I'll put it right here at the opening of this candle, right? Because I also know that that is a level. That is an important level. Although everything on this candlestick, there's 4 levels on a candlestick that it respects, and it's going to be the top of the price action, the bottom of the price of the wick, and then the body of the wick, right? So this one is only going to have really 3. It's just gonna be like the medium, the top, bottom, and then the middle, right? But this one, let me find one. This one's gonna have 4. It's gonna have a resistance right here at the top of his wick. It's also gonna have a resistance that is opening, and it's also gonna have a resistance that is closed. Or I'm coming down, so support. It's going to be a support down here and a support down there. The resistance at the top, and you can see like how I was saying this was going to be like a support / resistance. Look at this candle, boom, how it stops right there. It went all the way down, but it closes right there. It went down, but it closed right there. It went down, but it closed right there. Again, it went down, but it closed right there. Next candle opens up right there, right? So that's why another reason I use support and resistance on candles, not wicks. So as I'm getting guided on this trade, because I drew it out, I know where to take my profits at, right? And if I have a big gap, this is Kroger, right? So Kroger, this is not going to be a huge price movement. This is from 56.06 all the way to 56.45, right? But let's just say you know, I'm riding because I entered in here, right? And let me color coordinate this so it doesn't throw anybody off. Green is going up, taking out targets. The white was the entry. Right, so one thing that you can do is, and I use this one when I'm drawing up my target horizontal ray, because I want it to stop at my target. If you use a horizontal line, it's going to be more so like this line that never stops, is a horizontal, right? I use that for support and resistance because I don't want it to stop. I want to see the red, like if I draw it on whatever time frame, on a bigger time frame and going down, I want to be able to see that, right? So dang, it's about to be 10 o'clock. All right, let me hurry up. What was I talking about? Oh yeah, so taking out those targets. And another little small thing that I would do in consolidation is go to a smaller time frame. And that's why I was saying use this one, the horizontal ray, because once you go to a smaller time frame, you're gonna know where to stop at. You're not gonna keep going all the way because you're gonna know. So now, and we entered in right here. So I'm gonna find that. Let's say we go to the 5 minute. Is the 5 minute. I was on an hour, so you could bring it down to like the 30-minute first and then go to your 15, then 5 minutes so you don't miss any targets. But even if you go to your 5 minute, you're gonna find all those targets that you just missed on those bigger time frames. So now we're just gonna scroll all the way back because we gotta go to that previous data where we were at, right? And the 5 minutes is gonna take us there, right here, where all these lines are stopping. So this was our entry. We're gonna have a completely different setup for our entry because we just came to a 5 minute. Right? It's gonna be a completely different entry off of a 212, off of a 212. See, so that entry on the 5 minute was a bad entry. Can you see that? Because on the hour, we entered in and we kept going up. We broke down the time frames now. So this one was a bad entry because now I entered in and started losing money for calls already. And then it came back up. I had to be patient with it. Then it consolidated on me. So now I was either breaking even or making 5%, breaking even, making 5%, right? And that's going to make you very emotional. Now it's starting to break out. And it's like, oh, okay, cool, bet, boom. Now you're starting to hit some targets, right? But long story short, what I was going to say is you can pull out your handy dandy horizontal ray. And where was I, like in between 5406, you can go find more targets like right there, there, and you guide yourself through that trade, right? It's just like, this was my entry. I got more targets there. And on this smaller time frame, this is like back testing, but I'm gonna do a back testing class. It'll show me like, okay, cool. And this is how I learned the strat even better. It's like, okay, this is the time frame that I want to use, things of that nature. Why? Because I get a nice little big move on a 5 or a 15 minute. I like the 5 minute and the 15 minute. Why? Because it doesn't fake you out as much, right? If it's going up, it normally goes up, right? Once it starts going down, normally it goes down. I know that that was like so whack to say it that way. Apologize, I'm just tired. But long story short, what else should I say about this? Yeah, you know, and if you like, once you find those targets, like, look, I'll take it to the 1 minute. Once you find those targets and you broke down, like say you came from an hour or the 4 hour or the daily, and you started finding more targets and more lines are being created, watch how beautiful this place starts looking on a 1 minute chart. And then you start seeing this is why the so to me, in the strat world, targets are support and resistance. That's the best way I can explain that. And you're gonna see it right now when I show it, if I could get there, because it's taking forever. Where are these candles? It's all the way down here somewhere. See, it's just the 1 minute chart, so it's gonna take forever to get to like exactly where I'm trying to get to. Man, is this safer? I don't even know where the candlesticks are at on this chart. But see, these lines that guide you. I'm probably about to stop because I'm like, Jesus Christ, where's the candles? All right, so I'm gonna just do this. This is still be easy. Let's bring it all the way over here. Just bring it up on a 1 minute and you're gonna see Oh, I have to do it on. That's why I was trying to bring it all the way up. Oh, look right here. Hey, if you don't appreciate you. You can see how these candles flow on these targets. Look at this. That's some price action right there. And this is on a 1 minute chart, right? 1244. Boom, rockets, almost hits that target and comes right back down, right? But you can see how it hits targets and then it plays up there like support and resistance. You see this is the entry. You see your entry, how it's playing and bouncing off of your entry, right? And you can see how it's taking out targets, and you can see the support and resistance within the strat. Boom, this is support. Well, it's going to be different support because I'm on a 1 minute. But long story short, it breaks that resistance. And this is a target. You see how I'm talking about it? It breaks a resistance. This is resistance right here. This is the target. That's the price action of the wick. But if I take it to this wick, look at the breakout. That wick, look at the breakout right there. Boom, breaks, takes out target. Look at the accumulation right there. Remember when I say it takes out target, then it starts to pull back a little bit? Bull flag right there, breakout. So when you're on the 1 minute, these patterns will look different. They're not going to look different. They're just going to happen quicker, right? Somebody would have seen that and would have been like, that is not a bull flag. That is a bull flag, my brother. It's just on a 1 minute time frame. Pull, flag to the side, breakout, right? So that's another way that you can trace.
Hi, Moody. I had a question.
Yeah, go ahead.
Yeah. So when you're talking about the multi-time frame analysis, so for the strat, like you said about 1 hour time frame, and you decided the point for your entry, and then you went down to 5 minute time frame, and in that, there were a lot of volatility with the there was consolidation, and the price was dropping by. So do you enter the trade directly looking at the 1 day and wait for it to work out, or do you make your level up at 1 hour and then go down in like 5 minutes time frame and then decide your point of entry?
Yes, the second way you explained it. So I always chart on a bigger time frame, regardless if it's my daily. I like to start on my weekly time frame and I work my way down. Depending, like say I will only start on my monthly time frame if it's a new month, but I'm always checking the monthly time frame. But I like to start on my weekly and then work my way down to my day. For my day, I like my 4 hour. For my 4 hour, I check my 2 hour and sometimes my 3. And then I check the 1 hour. I don't really like the 1 hour is not my favorite. Is one of my least favorite, to be honest. And then I'll look at that, but I need to look at the 1 hour because I find targets there as well. And then, yeah, I just keep going down to smaller time frames. But like what you were saying, I chart on bigger time frames and I like to entering my trade and exiting my trade. I like to enter anywhere between a 15-minute time frame, a 5-minute time frame, a 3 or a 1.
Okay, so making out the level at the higher time frame and going down and making those level, and when you are at like 15 minutes time frame and 5-minute time frame, then you will decide your point of entry.
Correct.
Okay.
But also I'm a strat trader. Today I'm just not going over the strat. I am just talking about beginner stuff and uptrends and downtrends, but the strat is what's going to tell me to enter. Like once I get a new candle on Costco, soon it goes up, I'm taking this trade, right? And it's just because I'm seeing this right now. Costco, if Costco opens up tomorrow, it closed down here. If it opens up inside anywhere and it breaks this resistance tomorrow, it's going to mirror this candle. Say that it's going to go all the way up, but it's a morning star pattern, right? So the best way I could is 4 hours shows me. I use it depends. I use different time frames for different things, for strats, for pattern trading, right? So like my 4 hour, I like it to find morning stars and to find evening stars, because this chart's not showing me a lot, but yes it is. I'm just not trying to find them. There's like one right here. I love morning star patterns on 4 hours, and then especially using my RSI, because when you get those morning star patterns like a two down, right? And I always shout out Jordan, because that's one person I can say be catching the freaking bottom. But I haven't seen a lot of people that do that. And that's very rare, right? And I'm pretty sure that's why he averages down and he's learned his strategy on doing that, because he's probably learned, or he's probably aware that he does that a lot, right? So long story short, you got the pin bar here, right, which is an actionable signal. Even though the morning star, this is not a patterns class, but the morning star has a doji in the middle of it. It's like an abandoned baby. Since I've been trading for a year, I've learned to simplify things. See, because like a morning star has it's like a doji, it's an abandoned baby in the middle. You get two big candles, one red, one going down, one green, one going up, right? Or it could be green and red. It doesn't matter. Well, no, it does matter. The last one is going to be green. But when I'm saying that, it just depends on the time frame. Like this could be, no, it's going to be red to green. I apologize. I'm just trying to figure it out. I'm just trying to see if I know another way, but it's going to be red to green on a morning star. So long story short, how you see like right here, this is a good explanation on it. Bullish trend is a bullish reversal. Yes, and I should have said that too. A morning star is a bullish reversal, right? Evening star is a bearish reversal. Let me right here. This is the morning star reminds me of the sun rising in the morning, right? The price wants to rise. The evening star, when it shows me that, it shows me that the sun wants to set. The price is going down, right? That's a bearish pattern, and this is a bullish pattern, right? But there's a lot of patterns. But I use certain patterns, even though I trade patterns, they go with my strat, because this is going to be a two down, two up. That is a reversal. So once I started learning that, like this is one of the screens that you see that's pulled up right now. This is my extra screen that I don't trade on, right? This screen, if I'm in my office and I'm trading, I have this screen pulled up and I have another screen where I have my charts on, right? And I'm always having this up. And that's why or I feel like that's why I'm a profitable trader. Why? Because I'm disciplined and stuff like that. I have my rules, but I also have things pulled up. Like I'm in my office right now. I can see when I first started, like I probably printed out all these papers that I see, head and shoulders, inverted head and shoulders. I got some on my wall. I printed all those out like my third week of trading, second week of trading, because I took it serious. I told myself I want to win. You know what I mean? Like once I feel like I'm making excuses for myself, I go hard on myself. Like if I ask you, hey, what is support and resistance? If I have to ask you again what support and resistance, I automatically tell myself I wasn't paying attention. Why are you not paying attention? This is something that you're asking. This is something that you want to learn, right? So whenever I want to learn something, bro, I'm focused, because I know me, I'm gonna be hard on myself, and I don't want to be hard on myself because I'm my worst critic. But yeah, so that's support and resistance, and then I'll just so let's go to Costco. Oh, I'm on a 4 hour. That's why. All right, cool. Where is that little button? Oh, I'm already here. That's why. All right, let me turn off this strat. Somebody wanted me to do it on Costco, so we're gonna do it on Costco. Oh, and it's actually perfect that we're gonna do this on Costco, because this is a good question that I was about to, well, I guess I'm coming up for myself. I'm not drawing no support and resistance on this candle, right? Because I said I use the body of the candle. So if I draw support and resistance, it's just gonna be one line right there, right? I'll draw support and resistance to this candle, right? And things of that nature. Like, look, I just have a resistance to this candle. Like, that's what I'm seeing. I don't see no support, right? I see a bounce. You know, are y'all catching the terminology and how I'm using it? Because somebody would have been like, oh, that's support. This is support. That ain't support. That's just a bounce. Go to the end. That is just a bounce. Look, I'll show it to you. You see that wick bouncing. It just bounced off of that that level. If I bring you all the way over here where the candles finally meet these lines, oh, well, yeah, I guess you could call it support since it was resistance and it broke, but I don't respect that. The reason I don't respect that is because there's no price action in here. It's just consolidation on top of it. There ain't no price action in here. So price is going to come back. Oh, it's doing it right now. I'm tripping. Price is going to come back and fill all of that, and it's going to consolidate in there. Look, it's either the price is either going to leave this spot again, or it's going to consolidate in here, because that's what happened last time. And the chart doesn't lie to you. The chart mirrors itself and does the same thing, if that makes sense. So I'm going to choose a different stock, or I can just go to, let me see. Oh, I'm on 4 hour. I'm going to go to daily. Yeah, daily got me some support and resistance. Got support right here. Oh, I'm sorry. That was resistance. And this is support. I used to, like when I'm doing chart classes, I used to just be like, boom, support, like just type everything out and just be like, boom, this is that. But I think y'all get the gist. Let me delete this. If y'all need me to do that, just let me know, and I'll type on my chart too, like, hey, this was what I was talking about, but just let me know. But yeah, this is how I'm gonna mark up my support and resistance, right? And I'm gonna do it on a daily chart. The reason I'm gonna do it on a daily chart is because I'm a day trader, right? I'm not gonna draw it on a weekly. I'm not gonna draw it on a 5 minute. I'm not gonna draw it on a 10 minute. I'm not gonna draw it on a 7 minute. I'm not gonna draw it on a 10-day chart. It just doesn't make sense in my in my mind. It just doesn't make sense if I'm a day trader to do that. If I'm a scalper or something like that, yeah, I'm just gonna stay on my smaller time frames. But you drawing it up on a daily, it gives you your range, right? Because once you start breaking your time frames up, I'll just go to 4 hours so you can see that. Boom, that's your range. These 2 lines is your range. I go to the 30 minute. Let's see how it plays in my range. See, now that I'm breaking down my time frames and it's showing me more candles, now you can see it just playing in your range. And that's all the day. Let's go back, Kelvin. Let's really show y'all. This is the day. The day is one candlestick represents 1 day. 4 hours represents 2 candlesticks. I ain't gonna sit here and act like I know this because I don't know how many candles on the 3rd or the 2, but the hour has 7, right? And you can see how I'm breaking them down, and it's giving this 1 daily candle right here. This is all the daily candle, but from his range is breaking it down, right? Let me just go, now that I explained it like that, see, going to 30 minute, you see more candles. Now let me bring you down to your 5 minutes. Boom. You see how you know your whole move. It's not hard to trade it now that you did your support and resistance from your daily and you're going down to a smaller time frame, right? Because yes, keep in mind that when the chart comes out, it's going to come out and it's going to look like this. You just drew your support and resistance, right? And it's going to look just like this. You don't have no new candle. You're like, man, what's going on? But guess what? You know your range. Look, as you back test it, you start learning like, oh, wow, okay, cool, I got you. This was just a breakout. Go ahead and take the puts. That was a breakout. Let me see if it was the median. Yeah, that was the median. Retest? No, it wasn't, Kelvin. That was the retest up here, and it broke median and came down. But that's just because I back test this stuff, and I also trade this stuff. So let me go to a different chart. Before I go to a different chart, let's do this. Since I was just saying that, delete. Let's say I want to draw some support and resistance on here. And I'm kind of cheating because I already just drew it up on the daily. I'm such a cheater. I hope this is perfect. Now that I redrew it, right?
Hey, Moody.
Yeah.
Can you explain why you're putting those lines where you're putting them?
Yeah, I will. My bad.
And which one is support? Which one is resistance? Like slow it all the way, beginner type.
Okay. Hey, real quick for everybody on the call, am I moving too fast? I would like to know that so I can slow myself down.
Slow it down. Like
A little.
new trader yesterday type.
Well, yeah,
Please, you doing?
12 o'clock slowing it down. I got y'all. All right, hold on. All right, so real quick, what I was gonna do is since I drew it on the 5 minute, I was gonna go to the daily and I was gonna show you how it doesn't. That's why I said I cheated. And I'm a cheat because I know candlesticks and I know like, okay, that's wicks all the way down there, right? So it was almost aligning perfectly, but that's all I was gonna show you. But 9 times out of 10, somebody that's doing the smaller time frames and don't understand candlesticks, they're not gonna have it that perfect. It's gonna look something like that. And if you don't believe me, just test somebody. So
can you hear me?
Yeah,
I have a question. I see you drawing support and resistance on the daily, right? But wouldn't you draw? I'm accustomed to drawing on the previous candle. So, like, let's say that new hammer for today, the small one, that's today's candle. So, if I'm planning like for the day ahead, so let's say I was drawing support and resistance on the previous candles because I'm planning for the next day, right? Isn't that how I'm supposed to do it?
That makes sense. Hold on. I know what you're trying to say, but I wouldn't do that. I know what you're trying to say. I'm trying to go to a stock that looks better to explain it. Because you're saying this is what you're doing. Here, let me delete all this. You're doing this.
Yeah, because yesterday's range, and I'm trying to figure out, I guess get a gauge of where it would go today.
Yeah. Go ahead. I'm sorry.
No, I'm that's pretty much it. I was getting a little confused when I was looking at Costa because I know it had that crazy gap down, and yesterday's candle was like huge compared to today. So when you drew support and resistance, I wasn't sure if it was like planning for the next day, or because I know the range was open and close because of the one candle, but one last question. This is my first time in a class of yours. I noticed that also you don't use extended hours. Is that because of like the type of trading that you do, or is just like your preference?
I do use extended hours.
Oh, okay. You do? Okay.
Yeah, I don't use, oops, I just adjusted that on accident. Damn, where is it? I don't use, this one. All right. Why is it, where is it? See, I don't be on my computer all the time. There, no, it's not here. It should have popped up right here. I don't know why it's not popping up.
It's not popping up because you're on the daily.
Yeah, that's one. Yeah.
You gotta go to the lower time frame.
Yeah, don't forget to hit adjusted again because it messes up the candlesticks sometimes.
Yeah, extended. I never use. I've been stopped trading on regular trading time. I just don't understand. I'm just a full-time trader. I want to know everything that's happening.
All right, gotcha.
Yeah,
thank you.
You're welcome. So to answer your question, that's a good question. And that also it also is going to go in with what Jordan asked me to do on them smaller time frames too, right? So let's say I'm gonna just explain it like this. Let's say you draw your support and resistance on here, right? Because that's basically what I'm doing right here, right? And then I'm gonna get a new candle tomorrow. So how I'm gonna look at this is I'm trying to break. This is just my high. Oh, well, it's not the high. This is the low, and this would be the high of the day, right? So I just understand that I don't want to go lower than the low of the previous day. If I go lower than the lower of the previous day, not just support and resist, this is just the range, right? That yesterday played in. Once it breaks that low, it's going to go down. And it's because it took out a target, right? Looking at BA, I'm saying it's playing nice after hours. And to be honest, if it holds price and stays right here and stays above its median, it has a beautiful chance of going to about $36 tomorrow. Or I'm sorry, let me take it to the first resistance. It has a good chance of going to 132.62 tomorrow, right? And it's just like this candle right here is just gonna go to its resistance and come back down. If they're bullish, you know, it'll break resistance and they'll keep going for more targets. But to answer your question, you'll get faked out a lot doing it that way. With just using it, I don't know what you're using this for, right? Because even me, boom, now that I'm doing it on this candle, and I'm gonna just explain it this way because this is exactly what you're doing. I just know that this is my range, right? I'm gonna draw this up and I'm gonna know tomorrow when my next candle opens up right here on the daily, right? We're gonna open up inside, up, or down. Now I know that we're not in this range no more. That's the best way I could explain it. So like, say when I go to the 5 minute, because I'm gonna draw some more support and resistance. I wish it was a stock that had more. Oh, it still has more right here. This is the range that we were playing in, right? So I want to know, are we opening up here or are we opening down here, right? Because my pre-market is also going to help me. Just like you got a little bit of aftermarket here, my pre-market is also going to help me let me know, okay, we're going to a different level up, or we're going to a different level down, or we're staying inside for tomorrow. If we go inside, that's why another reason I draw this support and resistance. If we stay inside tomorrow, it makes it easier for me to trade that stock, because now I have like previous data to go off of. Let's just say this stock opens up and I'm drawing this line because I'm seeing resistance down here, right? I'm on a smaller time frame, so certain things that I say may sound contradictory to what I've been saying. On a smaller time frame, I'm still going to use the bodies, but I will use the wicks as well as support and resistance. And it's only because I am on a smaller time frame. Each one of these candles are going to be 3 minutes of the market being open, right? So these time frames are completely different than me trading. Like a 3 minute, a 1 minute, a 5 minutes, completely different than me trading a 15 minute. It is completely different than me trading a 30 minute. You know what I'm saying? These time frames are in and out. You do not stay, you're not, I'm not gonna say like Jordan this dude don't deal with emotions, bro. Like, I don't think he cried, stuff like that. So, you know what I'm saying? It's different when you have a certain control over your emotions and you're like, nah, I'm scalping, but nah, we're gonna keep taking this to the top. He trading it like he on a 15, right? But that's because he's practiced that. You know what I mean? He back tested it and he got nice with that. But on these time frames, you don't want to do that. And I was just going hard because I know I was like kind of contradicting myself. So I'm going to draw some support and resistance. And the first one I'm going to draw is going to be right here. And it's because, and I'm using my Alt H. I'm not like clicking these things and drawing it. But long story short, I'm seeing the fact that even from back here, bounce, 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 bounce. And you see, I got wicks right here, but I got bodies too. Right. So one thing I want to say is, just like I drew support and resistance on that bigger time frame, I'm also going to be able to draw support and resistance if that's what I want to trade, right? Because I'm not talking about targets or anything. These are not like, oh, I'm trying to take out targets. I'm looking for support and resistance. Somewhere we're going to bounce from, somewhere we're going to reject from, right? So let's just say we open up somewhere here or open up at the bottom of this. First thing I'm going to be looking at is like, all right, is it pushing up? Because I'm going to look at also pre-market. Where's my pre-market highs and where's my pre-market lows, right? Because that's another strategy that you can use. I'll talk about that in a few, but if it's over your pre-market highs, they normally continue to push up and buy calls. If it goes under your pre-market lows in the beginning of the market, they normally go short, right? And that's the scalpers, you know what I'm saying? The bots trading early in the morning and things of that nature. So let's just say I open up like right here below this candle. Below this line right here that is support, but it'll make it resistance. But I still have this wick action right here that is about to take out. I'm going for shorts, my buddy. Why? Because it's out of this range. It's still in his daily range, but we just spoke about consolidation. and we just spoke about how to trade consolidation. It is still consolidating if it's opening up as an inside bar. It is opening up in yesterday's range. So now I can trade yesterday's range. I'm gonna go ahead, boom, that's support and resistance. Let's go ahead and get some targets. I missed the target up there, but let's say we just took this target. I want that target. I want that target, right? This target is kind of the same target, but I could draw it because it's just a couple of cents down lower from 81 to 74, right? If I'm talking too fast, please tell me to slow down.
Mine look a little different. Is it because of the adjusted?
Yes. You talking about because of the hours?
The ADJ underneath, I think, was a little different.
That's just that's just adjusted data for dividends. It's the it's the session. Yours is different.
All right, cool.
Okay.
Yeah, thank you. Figured it.
Ain't no thing.
I have a question. You know how you said like if it breaks that support right there, you would take it short. Would you wait for a retest? Would that be confirmation or no?
Waiting for retests are confirmations. That depends on what kind of trader you are, or how you're trading that day. Me saying that I would jump in, that's me being aggressive because I'm talking about the market opening up at 9:30. The market opening up is very aggressive and indecision. So if the market was already open for about 30 minutes or something like that, I would look for a retest. But it just, it also all depends, like if I have my volume turned on, like it all depends on like the volume that's coming into that certain candlestick. Oh, that certain candlestick. So there's a lot of things that play into that, into me just being aggressive or me just waiting for a retest. But to answer your question, you waiting for a retest is called confirmation.
Okay, thanks.
Can you explain a retest and what exactly it is and how we see it?
No, because I already explained it. No, I'm joking. I got you.
Okay.
I be joking a lot, so don't be taking this personal now. All right. Let me see.
Moody, did you eat today?
I ate one time, bro. Yeah, you could tell, can't you?
Come on, bro. You gotta get a snack or something.
Bro,
He said he needed Snickers.
Yeah, I need a Snickers. Nah, I really need to eat an apple and some fruit and some grapes. Oh, that's what I should have did. I should have ate some strawberries before I did this class. Strawberries help you focus. Where was I? My bad, I got kind of sidetracked. Oh, she asked about a pullback. That's what it was. All right, so pullbacks. Super easy to talk about.
Retest.
Retest is a pullback. So nah, retest is kind of like a pull. It's just different terminologies, but it's kind of the same thing, if that makes sense. So I'm gonna show it to you in two different ways. All right, so and I'm gonna try not to look at the time because I'm gonna just talk about candlesticks because I'll be trying to find like the perfect setup in the perfect time because I'm like, bro, the market's closed or the market is after hours. So right here, let's just say we're looking for a retest, right? This is the break, and I'm drawing this line. Let me delete all this line. I'm drawing this line right here because this is a resistance. And the reason this is a resistance is because you can see, and I'm drawing it, well, let me draw it correctly right here. I put it on top of that wick and I shouldn't have did that. So you can see how the price breaks over it, right? And comes right back down. It's like a retest. This is not a retest, but this is a pullback, right? It breaks resistance and it pulls back, right? It breaks resistance, but it keeps running. It pulls back. This is a pullback, but it just doesn't pull back to the breakout, right? It just broke, it pulls back to another level, right? What I'm seeing from hindsight is that it had a gap right here, right? Orders didn't get filled and it came back down to fill this gap. This line needs to be a little lower. But it came back to fill that gap. Once it filled, you see no candles in there. Once it filled that gap, it did it again right there. It didn't do it again right there. It took out this target. This candle said, boom, let me take out this target. Since we filled this gap, let me go ahead and fake these people out that thought that we were going to keep going down short to this support level. That's why they did that. They was like, oh no, we're going to go back to the support. We're going to fill gap. Price reversed right here. This was a 3-bar and then push back up, right? So this is considered right here a retest, but a pullback, right? And I'm sorry. So when we're saying retest, is retesting a certain level. A pullback is more so of the stock ran up like here, like so, right? We broke some resistance. It gapped up, whatever the case. I'm just going to talk about what I see, but it just pushed right up, right? Once it went up, this is called your pullback, right? Because price went from 126 all the way to 127. It had a nice run, right? So now people are taking profits, and it's also a double top, right? The double top that I'm seeing, tap, tap, is not going to always be perfect in a line. Sometimes it could be like tap, tap down here. You know what I'm saying? Or tap a little bit up here. It's still, well, that if it taps up there, then that's more so of like a new high. But let me delete. But yeah, that would be your double top that I'm seeing. And then it pulls back, right? Now that it's pulling back, what we will call a retest is, let's say this right here, say this was our entry, right? This line of the breakout, and we missed the breakout. This is it breaking out, giving profits, taking out targets, hitting a double top pattern. This is a pullback. The stock is now pulling right back, taking away majority of all of its profits because it jumped from right here, and say this was your entry. This is a retest to your entry. It has come back down to your entry level now. Now you can either buy more, but you want to make sure you understand the candlesticks and you understand these patterns. It's more so like a bull flag breakout, right? Or like a cup and handle breakout. If you got another, just like, look, let me just break it. Just like you caught a double top right here. Check it out. Breaks out, pulls back to your entry. You can re-enter your trade if you took profits up there, right? Or if you didn't, you can just add more to your position right here, whatever the case may be, however you're wanting to trade, or asking any analyst any questions about a chart when it's live and they're giving you their analyzation behind it, right? Now that this pulled back and it also retested your entry, right? So you see why I'm repeating it the way I'm repeating it so you can understand. I wasn't trying to be rude or anything, but the pullback is the same thing as a retest. The retest is you knowing, you drawing on your chart and you knowing your entry level, or you knowing your support and your resistance. So when we say, hey, the stock is coming back to retest, we're talking about the level that we just put out, right? Oh, it's coming back to retest the level right now. You know what I'm saying? The stock is coming back. And if I go to a smaller time frame, you'll see what I mean. The stock is pulling back. It's coming to retest. It's coming to retest this entry level that you missed, right? Or that you got in. Now that it pulled back on a bull flag, you can see the bull flag more perfect now in this 1 minute, right? Into some consolidation. Then it breaks out, but pulls back, retests your entry, boom, keeps going, right? But even though boom, it came right back down, retested again and kept going, retested this resistance, right? Pull back. And this is on a smaller time frame. You see that we did not see any of this on a 3-minute time frame, right? Because each one of these minutes is going to be, each one of these candles is going to be a 1 minute time frame, right? So this is consolidation. Just like I said, bull flag, pullback, consolidation. You can trade the consolidation if you would like, right? On a TTO. But I'm just saying TTO because it's consolidating and it's giving me a trying day out right here. But you can see the retests. Retest is resistance, retest is support, retest is resistance, retest is support, retest is resistance and breaks out. Price is over where you needed to break, comes back and retest. Doesn't come back to retest down here. It broke over your resistance, pulls back, retests a new support, a new, which was resistance. It was resistance right here. New resistance, breaks out, comes back to test the old support. It's having trouble, retesting, boom, now it's coming back. More volume most likely, I don't have it turned on. Boom, breaks out again. But the thing is, this is a 1 minute time frame and you have to understand patterns, right? This pulled back again because this was a double top, breaks over, resistance, comes back down. It's retesting all these levels. There's more levels that I'm not drawing down here. If I draw this level, you'll be seeing, watch how it adds up with the rest of everything that we're seeing. Retests, breaks out, comes back and it retests this level. I put this line right here because I put it at the body and it's also touching multiple of my candles, right? But when you're looking at this, you don't want to just draw lines. You want to go with what your candles are showing you. That's the bottom right there, right? Boom, that's the real bottom. That's a hard close and pullback. Those are not bottoms. These are bounces. Wicks are bounces, right? So now that it did that, this was a double top right here, what I just showed you. Breaks over resistance, comes back to retest. Breaks over resistance, double top, comes back to recess. Why do you think it fell again? Triple top. Triple top is a bearish pattern as well. Double top is a bearish pattern as well. Why do you think that it went back up? Because it first top to the top, first bottom to the bottom. Double top to the top after the first bottom, brings it back down because it's bearish. Brings it back down, bounce, but it's still a double bottom, right? Just like it was a double bottom right there, and it bounced back. Double top, bounces back down. It found some support, right? Double bottom, pushes back up, 3-bar. You know what I'm saying? So I hopefully I'm just breaking it down perfectly, but you know, and then this one right.
Yeah, you are.
Okay. Then this one right here, after it gave you a triple top and it came back down, what did it do? Give you a triple bottom, right? Once you get your triple bottoms, it pushes back up, right? I don't know nothing about no quadruple tops and quadruple bottoms, but actionable signal, pushing up. You feel me? Oh, and this actionable signal, I'm sorry, it is a dragonfly doji.
When they say when they'll call out like a play and they'll say, okay, wait for it to break and hold above this level or below this level. Once it breaks that level, when they say hold, does that mean that you have to wait for like at least one candle to close below or above your level for it to be considered a break and hold and a confirmation to get in the trade?
Yes, I was doing something with the doji, so I heard your question, but it sounded so right. But if you can just say it one more time, just so I could catch every part that you said, but it sounds very correct. Or I could just repeat it. Did you just say that? So when an analyst says that we need the price to hold, basically is saying blah, blah, blah. Basically what I'm saying is right here.
I could say it again if you want me to. With the break and hold, I just get confused about like when it breaks out of that either support or resistance, right? Mm-hmm. And they say, okay, break and hold before you get into the trade. So the holding part is basically you want confirmation, you want a candle to actually close below or above your line, your support or resistance before to get into that trade. So that closing candle is your confirmation that it's actually breaking that level and holding. Is that correct?
Correct. And I'm circling, it's happening right here. After everything that I explained from like the bearish and bullish movements, this price breaks back over resistance and it's holding, right? Because the opening is at the top, the close is at the bottom. This is just price action. The price is holding up here, boom, shoots it back up. So, like even right here, say this is the resistance that we wanted to break. What you want to see is this new candle come out, break resistance and close over. You see how it closed over your resistance right here? It closed, keeps pushing up. That's what we mean by we want to break and we want to hold over. This as well, it's like we're breaking this opened up here, right here. It pushed down, right? So this is another example. Say we want to hold this price to keep going up, and we're like, no, we're gonna go for calls if it holds the price. Jordan always says that, like, hey, we need a 5-minute candle close under resistance or under support, and he normally say the price point, right? So what he's saying is, all right, let's say this candle is on a 1 minute, right? It could be on whatever time frame. It opened up right here, we want to hold over this resistance, and we want to break over this resistance. It pulled back, right? As it pulled back, took out some targets. I'm just going to talk about it because it's there. Took out some targets, and it started retracing back up, right? When it started retracing back up, that's it holding. It's holding price now, right? It's back green because this was red. This whole candle was red, and this candle was full, like this candle, at one given in about 30 seconds of the market, right? Or 40 seconds of the market. Then it pounced back up, and it went back green because it passed its opening price, and now it's over. Look, it's over the resistance. That's what he means, or any analyst means, breaking over resistance and holding the price. Now that it hold the price, and especially when you see candles coming up and they don't show no wick action, like this one showed wick action and still jumped up, they normally jump up, right?
In that example that you're showing, you would have gotten into the trade right there at the closing of that green candle.
This one, I would have gotten my trade right here as soon as it broke this candle, because that's what the strat tells me to. That was my entry. That's a 2. Look, it's just, I have to say the truth. Oh, and it wasn't a 2-1-2. It looked like a 2. Oh, I didn't look at this candle. This was an inside bar 2, but inside 3. And I forgot to look at the bottom. But I would have entered in at the top of this candle. I draw a line, make it white. That would have been my entry point and going up. My entry points are always going to be the previous candle's high or the previous candle's low. So if I wanted to enter this trade, I would have entered in right at if I wanted to go for calls, at the break of this one. So this candle would have finished, closed, this candle would have opened up, it was inside, it would have been a 1 right here. Soon it would have showed me a 2, we went 2 up, I know to take the trade. I'm on a chart, so if I'm on a 1 minute chart, I don't have another chart to go down, so I'm going to be aggressive if I'm on a 1 minute chart, because I can't go to a 30-second chart. I'm saying I can, but I don't pay for that.
Okay, got it. Yeah.
Okay. Is there any more questions? Where am I? Oh, support and resistance and stuff like that. Are y'all understanding support and resistance? Do I need to go over it a little bit more?
We understand. I'm understanding. Thanks.
You're welcome. So like, even on this naked chart, if I wanted to find support and resistance, like say off of this candle, I'm going to draw it right here. I know my resistance is right here. It breaks out. I know there's resistance right here. And the reason I'm placing the resistance right here is because it's at the top of the candle. The top of candles are resistance. The bottoms of candles are supports. I'm on a 1 minute time frame, so I have to say it that way and explain it that way. Because if I was on a 5 minute time frame, I can say it a different way, right? It's still, I will say it the same way, but it's just, watch this. We're going to use these two. Matter of fact, if we're going to lose our place, we're going to do it on the last candle. And we're not going to, it's just I got my after hours on. I'm going to go to, no, I'm going to stay on this one. I'm going to just remember this is what time? 15:50. If I do it on that one and I go down to my 1 minute, dang, I'm on a 5 minute, so it's gonna, I'm doing too much. I'll find it. Right there. See how it just gave me wick action now? It just brought me down to the wick. So you can still bring it down to your small time frame because you brought it, you drew it on a 5 minute. But if you're going to be trading this 1 minute, you cannot correlate none of these time frames with that. You can correlate, yes, I'm sorry. You can still correlate it, but understand that this is his own world. This 3 minute is his own world. 5 minute is his own world. But these can correlate together a little bit. Anything bigger than this is completely different. You know what I'm saying? You can see the chart, how it's moving. Like, look at that pattern versus the 5 minute pattern, more of a head and shoulders.
Hey, Moody, you got a question in the chat. Muhammad and I think Carlos got the same question.
Just to reiterate, if I am getting it right, in a daily time frame, you take the body of the last candle only, not the one before it, to play support and resistance. Correct. Yep. Same question. Correct. That's support and resistance, and it also tells you your range it also tells you your range from yesterday. But like another thing that I would say too, you can draw support and resistance on your 30-minute chart. Right. But if you draw support and resistance on your 30-minute chart, and the reason I'm saying 30 minutes, because the 30 minutes is going to allow you, because I got my strat on. 30 minute will allow you on the strat to trade multiple strat setups, right? Because the 30 minutes is going to have like 14 candles throughout the day. So it gives you, if the hour gives you 3 setups, then the 30-minute gives you 6 setups. Let me delete this. You can also draw support, and this is a cup and handle right here too, guys.
Moody, I have a question.
Yeah, no problem. Go ahead.
But when you use the 1 minute and the 5-minute chart, that's for day trading though, right?
When you use the 1 minute and the 5-minute chart, that's for day.
I mean, the 5 minute, not the chart, but the 5 minute. You see how you have 30 minutes up there? Yeah, right there. The minutes, that's for like when you do day trading, right?
Yes, it's intraday trading, but to break it down, 1 minute through the 5 minutes, more scalpers.
Right. Okay.
And when I say scalpers, because I'm a scalper as well, we're not in our trade that long. We're just taking a few candles. Like I'll probably just take these 3 white soldiers and I'm done. Like,
Oh no, yeah, I know. I can't hang with you in Jordan.
oh yeah. But it's just because it's just we're trying to. You'll be at that point. I promise you. Give me a second. You'll be at that point. It's just building your account. Once you build your account, you'll start learning. Like, bro, I don't got to be in this market all day, and there's a whole bunch of other stuff that I can get done. And yeah. And I want to trade more, but it's like, bro, Jordan's building this huge community, bro. I have to run a mile, 20 miles a minute, you know? So
Yeah.
I have to do this, I have to do that, and then I got to catch up to him. Look, he just said, Moody, this dude,
Yeah, they saying to go to bed, Moody. So you've been up all
I
day.
need to go to bed. No, I need him to go to bed. If he go to bed, I can catch up.
Moody, you gotta get some sleep. We got a 24-hour Zoom tomorrow, bro. So
get some sleep.
That don't mean nothing, bro. Tell him to get some rest so I can catch up.
We got a big day tomorrow. We taking out targets. Pew, pew, pew.
I'll be on there all day.
Hold up. Wait a minute. Stop. Thanks.
Y'all could just talk about anything, or we could just elaborate on certain things. But if y'all want me to chart, if y'all have any chart requests or any questions, just ask the questions. Or just drop the chart or say, Moody, pull this up. Do you want me to chart a chart for you tomorrow?
Hey, Moody.
Yeah.
How do you trade with the job, with the 9 to 5? How you work that out?
I can't answer that, bro. I mean, what you work from home? Or you in the office?
I'm a truck driver.
Ah, that's dangerous. So
yeah,
you trading at the pit stops?
Well, I'm trying to get to the point where I'm trading at the pit stops. You know what I'm saying? I'm still learning and everything. So I haven't traded anything yet.
Yeah, so you probably would be like a scalper mentality. Like I didn't think I was a scalper because I got 9 to 5, but I work from home. I'm on like 3 computers. So, sometimes I have like maybe 10 minutes, 5 minutes, before I got a meeting or something like that. So, I'm looking to see what I can get in for like probably actually 5 minutes too long, probably a minute, at the longest. Anything over a minute, and you kind of like probably gonna turn red. So yeah, you probably gonna be like a scalper type mentality. if you know trying to trade during the pit stops, and then you going you got Wi-Fi? How you gonna do it on your phone?
Yeah. I mean, that's how I would have to do it. I mean, I could bring my laptop and turn the hotspot on like that.
Actually, you probably want to look into swing trading. Yeah, you probably want to do like trial swing trading, because you can, be in a trade for like a couple of days and don't have to worry. And, you'll set up like some stop losses and don't have to worry about keep checking it every minute. You'll be in it probably Monday, and then you'll, check it when you get home or when you get to like a pit stop, making sure you're good. But once you set your stop losses and stuff like that, that's kind of like an automatic trigger. If the trade was going powerful on you, then your stop loss will kick in and you'll be good. So yeah, I would definitely probably look at swing trading probably. Yeah.
Yeah, that would probably be best. But what I tell you, I drove trucks for a little while, and I would schedule my my trading hours like separate from like when I would drive. So like I would get up crazy early in the morning. I start my driving, and then I would say between midnight and 2 o'clock in the morning I would start driving. So around when the market opened, I was ready and I was done driving pretty much for the day. I don't know if you have that ability to do that based off of how you drive. Like, I don't know if you over the road or if you like regional or, local, but that's what I would do. I would just, oh, okay, yeah. So, but that's what I would do. So swinging might be better for you. But when I was over the road, yeah, I would just get up extremely early and, knock out majority of my day. And then when it came around to like, when the market opened, I could be in the market and be parked for a good portion of the day.
So with the swinging, I can buy contracts after the market close, or I thought you had to get them while the market is open.
No, you can only trade options and swing like during the market. You can only trade options when the market is open. So yeah, you will have to still, get into those trades while the market is open. But you're going to be looking at larger time frames. So instead of what Moody was speaking about primarily today, he was marking up his support and resistance lines based off of a day candle. And then you have all the incremental, time frames below that. When you swing, you have to look at farther time frames, like the weekly and possibly the monthly, depending on how far you intend to swing.
Yeah, it also depends on the type of stock you swing into. You got it, because certain stocks have big price movement. Like Tesla can swing 30 to probably 60 days in a day. So a smaller stock, less volatile stock, will probably only move about $5, maybe $3. In this market,
pretty tough. It's pretty tough to swing nowadays.
Yeah, I wouldn't recommend swinging in this market, especially earning, because it's so volatile. It's not predictable. With swing trading, you can kind of predict if the stock is going to go up or down. This market, you can be up 2 days, down 3 days, down 3 days, up 2 days. It's like a roller coaster, and you don't want to get into a swing and then you'll be like up 1 day, down 2 days, up 3 days, down 1 day. Like, nah, you don't want that.
Yeah, swinging is pretty difficult in this market because you still got to factor in, you swinging and you having days where initially you're in the right trade, meaning that it will likely go in your favor for that trade. But then you factor in the fact that you have time decay, which is going to eat at your trade until you get into profit. So swinging in the current market is a lot more difficult, but I mean, ultimately, we starting to get a trend, and the trend look like it's heading downward for the most part. So you will be able to swing more puts if we continue to on a downtrend.
Thank y'all, man. I really appreciate it.
Yeah, but Avery, one of the traders, Avery, she has a channel. She's a swing trader, and you check her channel out. She got some, swing trades that she put in there and some like educational stuff.
Yeah, definitely. So I would tell you, if you want to swing trade, yeah, definitely check Avery out, but definitely check Lauren out. She puts out a lot of swing trade ideas, and she back tests all of this stuff. And a lot of people probably don't. Well, I don't know everybody that's taking these trades, but all these trades that she's putting out are fucking making a lot of money. If you're taking them, especially everything that she's just been putting out. She did a whole extensive research on energy, and then put out, like, she let everybody know, hey, this is what I'm doing. This is what I'm doing with energy, and then puts out her analytics and what she sees behind it, right? And then, she's a trend trader, right? So that's what she does, like, she follows trends. So, like, that's what I'm telling people too, like, definitely check out this channel. Look at everything that she put out and look at the day that she put it out, right? And then go look. And these are like, I believe these are just like reviews of things that she put out, right? Because she had been put all this stuff out and told people, showing people cup and handle breakouts. You know what I'm saying? So, but she uses both candlesticks. So, but she knows a lot more about like trend trading. So I would definitely go in here and try to find some trade ideas. You can also go down to like David watch list, right? And look at what he's speaking about in the market sentiment and things of that nature. The best thing that I'm going to tell you to do, I'm just giving you resources. Also, Jordan does some swing trades as well. JJ does swing trades as well. Zay is more of a scalper and a day trader, but he does swing trades as well. He loves swinging Mara, and like and when Bitcoin's going down, he's gonna, I said Mara, he's gonna MRO, the oil stock, and also anything that's Bitcoin related mining stock. He shorts them as well. If you don't mind, can you please mute your mic? Thank you much. But what I would tell you to do is learn these charts. You're at work. I'll come back to this, Lucid. I was charting it up, bro. But long story short, you want to start at your weekly. You're a swing trader, so you're not really too worried about your daily chart, and you're not really too worried about smaller time frames and pullbacks. You want those for adding into your position. You're going to use your weekly and your monthly chart, right? You want to cash things at the bottom at like support. You know what I'm saying? So I got Tesla pulled up. Let me pull something else that's like a little different. Like, everybody's not about to be trading Tesla. I'll be trying to go to like a small account because most people are going to trade like a small account. But like PFE, this is what you want to do, bro. You want to utilize your weekly chart and your monthly chart. If you would have bought it down here or anywhere in here, where the price went. If I take you to a smaller chart, you're going to get faked out. You need to buy 3 months out to 2 months out, and it just depends on your Greeks. If your theta allows you to go ahead and buy 3 weeks out or just a month out, and your theta is amazing, maybe $1, maybe a couple of cents, maybe $1 and some change, then hey, then you're great, because that stock pushes up 30 cents, you're recovering less than cents, you've recovered your theta. You know what I'm saying? So that's why I'm saying you want to use one of these. Like, even if I pull it up to the weekly, look at this trend. Even when it pulled back, it would have not scared you if you would have got anywhere in here. Look at that. That pullback never came, like your stop loss, like this. Let me draw it up for real. So let's say you entered in on this break, right? This 2 up right here on a reversal. And I'm always talking about reversal because that's what I look for. The green is your entry, right? Your stop loss right here, we're going to make it red. Look at how easy it is to trade. And I'm telling you this because I do this myself. I only speak from experience. And this is my whole goal. My whole goal is to only look at a monthly and a weekly chart, and to look at daily to add to my position. I don't want to have to go into these time frames, because that just makes you trade all day and well, not really, it just depends on your account. That's why I'm always like entering on the smaller time frames, loading up on my position, getting the hell out of the market. Because one thing I understand is the longer you leave your money in the market, the quicker you're gonna give your money away, right? If you don't know what you're doing. So long story short, we entered in, oh yeah, it's because I was on a bigger time frame. Let's go back to the weekly. We entered in right here off this 2-2 reversal, and that is not a 2-2. I think that's a 3. Let me turn my strat on. No, that's a 2.
I can't figure out how to make the lines. How you putting the lines on the chart like that? I'm on a laptop, but I can't figure out how to.
Yeah, I'm gonna do a charting class too. I'm gonna do a class on how to use trading views. I actually have a class. It's just some lame people got me stuck on their YouTube and they don't want to like let go of my content. I don't understand why. But long story short, I'll just remake that class. I'll just do a class and record it on how to use trading views, how to use every little thing on trading views. I'll definitely got you, bro. Don't worry. And then I'll do a class, probably the same class, and I'll just do a charting class on like how to chart. But to get your lines, you want to click right here to your left. You might have them to your left or you might have them to your right. You'll click the first one right here is going to be your trend lines, and they're going to have trend lines, arrows, rays, different types of tools that you can use to draw. I should have been told somebody about this. You can use this disjointed. You can use this disjointed channel or the flat bottom for your broadening formations. Okay, that's what it was. But so it's like the bottom is gonna be flat. Like I gotta find a broad information.
Can I just say something real quick? He could do limit orders too. Just plan his setup, his levels, and do a limit order and get in the trade.
Yeah.
Even though he's on the road, and do a stop.
Yeah, fact. You could definitely do that too. Set a limit or like exactly what she said, that'll help you as well. Me, I'm just trying to show you how to like capitalize on your like profits or something like that. But I would do exactly what what's your name? Speaking by the way, because you keep dropping gems.
Karen.
Karen, appreciate you, Karen. Thank you so much.
No problem.
Thank you, Karen.
So
you're welcome.
Say you entered in on this 2-2 reversal. Green is your entry. This is your look how beautiful this is. All right, boom. You entered in, you took out some targets right there, right? And you're holding this for the whole week, right? Because this is a week. And let's say you're 3 months out or a month and some change out. You have time on your contract where now, boom, you're in profits, right? Now that you're in profits and you're on this week, I'm sorry, you entered in right here. So you got in this week. Now that you're in profits, and you haven't moved your stop loss, you can move your stop loss up to the bottom of that candle just so you can either break even or, well, no, you're going to end up breaking even right there, or you're going to lose. You're going to end up like 5 to 10%, no, like 5 to 10% down because you got time on that contract, right? But now that you moved your stop loss up, this week already went by, right? So now I'm going to erase the entry because we knew we entered down here, right? Well, I'll leave that there because I want to explain it to you. Wow. Green. Entry.
Hey, it's Lenny's birthday today.
And then what you're gonna do is you're gonna bring it up. You're gonna bring it.
You should give him a call.
Huh?
All right, we'll call.
Yeah, mute that dude. Happy birthday though. But long story short, now that you know that this is your entry and you took all this profit and you still have not cashed out on your profits, right? The next week opens up and it starts pushing, right? It opens up right here. You can leave your stop loss down here. I would tell you to just bring it into this candle right here, right? Before you bring it to the bottom of this candle, because we don't know. This is the week starting. The week opened up right here. We don't know when it came down. So you don't want to get stopped out your trade just yet. You're still in profit. So as it continues to push up, and now that you see, oh, the week has fully pushed back up and it's green now, now you can move your stop loss up, right? Boom. Now that you move your stop loss up, only 2 weeks has gone by on this trade. Mind you, theta is eating at your profits, but you continue to make way more profits than the theta that is taking away daily through those 5 days, right? So now the next day comes out, the next week comes out, and we're pushing now. We're pushing, and you're deep in profits. You got in this trade at 85 bucks. Now you're all the way up to $109, and you're still now out of this trade. This week stopped you out. When it opened up, wherever you put your stop loss at, you ended up, it don't matter if it was right there, it don't matter if it was at the bottom, you never got stopped out. You just lost a lot of profits that week, but then it came right back. So that's why I'm saying you might want to use a bigger time frame, and you might want to use a later expiration date to capitalize on your move. But you can also do exactly what she said and just do a limit order and do what Jordan does, where even if you're day trading, you have now jumped into a trade, and let's say it has ran now 15%, you can put a trailing stop loss on there, which I don't utilize and I need to start utilizing. You can put a trailing stop loss there, and your trade never goes red. If you end up getting stopped out, instead of getting that whole 15% that you just had, or say it ran to 20, you end up getting stopped out at 10%. But now that you have it run to 20%, you can move your stop loss to 15%, your trailing stop loss, if that makes sense. Hopefully that's able to help. Let me finish charting this up. But yeah, oh damn, I really didn't finish charting it. All right, let me just do this quick because I was trying to go through all the time frames. Yeah, I like Lucid. I like Lucid. Here, I'll give you entries and exits now. I just have to see. Take Lucid at the break of this candle. If you want to be aggressive, I'll give you 2 entries. If you want to be aggressive, you could take it at the break right here at 1961. I will wait for 1994. Let me make this white. I had to go to a smaller time frame because I didn't like the daily to try to give you the entry off of it. It was just going to take forever. And then for puts, I'm going to make sure that this is right. I'm going to make it red. I'll change it back to white. Yeah, I like it better than actually going all the way down to the bottom. But no, I don't. No, I don't. I take it back. I wouldn't even touch Lucid because I wouldn't want to get faked out. I would want the bottom of this wick to go down because you have this thing, this 50% thing is on there. But you'll end up taking this wick out and coming back down. But I like Lucid to be bullish and run tomorrow. It all depends on spot too, right? Because you got an inverted head and shoulders. You're in the middle of your broadening weekly formation, and you still have like a $2 move to run up, or possibly $3 move to run up before it rejects and start going down. But this is also a breakout level right here at my alert, and I had that already drawn so I don't forget about Lucid. I had it drawn on my weekly candle at a break at a resistance so we can start eating up this PMG. Because we already got the reversal for the week, but I already missed Lucid. I ain't gonna lie to you because my 10-day chart is showing me that I missed the move. It gave the 50% retracement rule. This is going 3-bar. It's a 2-bar right now, but this guy is going 3-bar. It happened a couple of days ago. Let me see. Right here, when it bottomed out, it came to the bottom, and see, it made a 3-bar right here. That's crazy. And it went to its 50% retracement of its previous 10-day chart, previous candle on the 10-day chart. Once it passes its 50% retracement, all this is just corrective activity, bull flag, right, at a resistance, right, the doji, the opening price of this candlestick, not the wick, right? This actually took out the wick, this candle right here. So I like it to the upside. I would say take Lucid at 1961 or 1964 targets.
Real quick, Moody, when you say like a bull flag or a bear flag, is that like a candle or a specific pattern?
It's a pattern right here. Bull flag is a big pole flag. I'll break that down here in a second. Let me just get his thing so I can stop charting this one. I gotta break it down. Jeez, let me go to 15. I got you though. So when you just heard me say, "Oh, I gotta break it down," it's because I saw this big candle and it was just one big red candle, and I was like, "Oh man, gotta break it down." Target. Jeez, I thought I just did. I gotta break this down even more. Target. And I'm on a 15. Let's go to the 5 minute. I'm saying that because $20, 20.77 all the way to 21.10. I'm not trying to get caught in that. Like if I was to take the trade, or I wouldn't want you to get caught in that. And you'll see what. Oh man, I keep doing that. You'll see what I mean. Oh snap! It is 11:13. I am tripping.
Go to bed.
Let me answer a couple of questions and I'll be off.
Go to bed, Moody.
You see how I'm getting these targets, right? By like breaking down my time frames.
Go to bed.
Right. And I'm just giving you a whole bunch of time frames. I mean, a whole bunch of targets. Now let's find some targets to the downside. Oh, I didn't give you no put. Oh yeah, I got to put entry right here. This, I'm just gonna draw orange because I don't know why I drew that line there. I think it's like some support or something. We're gonna draw this line white. The white line under the orange is your put entry. Targets. I gotta try to remember what I'm trying to do right now. I'm so tired. Boom, boom. Watch how nice I am. Let me stop right here. Boom. See if that hit the target. All right. Dang, let me make these. Okay, so I just noticed I made all the targets up here red. So damn, I don't want to have to switch it over. You're gonna be able to do it on yours. So what I'm gonna do is make these green. Anything after the white up red is calls. These are puts. All right, and then here I'll do you a favor. 30 minutes. Where we at? Damn, we gotta break you down. See, this is what I mean by damn, we gotta break you down because I need to find targets in here, right? I'm gonna just take it all the way to the 5 minutes. All right, good. I'm just gonna break it down there for me. Now that I break it down, where's 7-11? I don't want to mess with 7-11 because I already got that one. So what's this right here? 7-19. Nope. We gotta go under 7-11. 7-16. Watch me do this. I'm gonna take that one, and I'm gonna take that one. The reason I put it there is because the back of the candle right there was the wick action. So if I go down to a smaller time frame, I'm gonna just go to the 1 minute because it's doing too much right now. See, the 1 minute is gonna show us some love. 7:59. So I could have got 7:16, but we don't want to do that. 7:21. Look, I'm gonna just give you all these targets because they're closer. And you got this one. And I'm not gonna erase that extra target that I drew because it was actually a target. So yeah, boom, there you go. That should be good enough. 4 hour. I just want you to be able to capitalize on the move if it wants to keep going down or going up. So one thing I would tell you, go ahead and just take a picture. It looks really cluttery, bro, but when you put it on your chart, it's not gonna look like that. So you want to just take a picture of this. Let me turn off the RSI so it can be better. Pull this over there. And the reason I'm saying take a picture, you just want to put these levels that I marked up on your chart. These are targets. The white is entry for puts. These are entries for calls. And let me not even do you like that, my brother. I'll give you another entry for a put because this is like all the way down here. Damn, I like this for a put. Why do I have this there? 919. Oh, that is a put entry. All right, so this is a put entry as well. I didn't even notice I did that. But If you take this put entry right here, this range, these are calls up here, and these are puts. That's also a put right here, entry, if you miss all of this move, right? But the only target you have right there, you got another target, but it's going to be somewhere in here, right? But right here, that 1892 would be your target if you take it down right there. And then I would just tell you to take it down to 1841 because that is resistance, right? So that is resistance to your left, right? All these candles trying to break out, that is resistance. It broke out. So that'll be support now. And for the person that was asking about when I'm talking about bull flags and bear flags, this is a bull flag right here. This is so cluttery that I want to teach you the proper way. So the person I was asking, please take a picture. I'm about to delete all of this. I delete it in 5 seconds. 1, 2, 3, 4, 5. So, bull flag. And we'll go over this on a patterns chart class. Bull flag, that's your pole. This is your flag. Ew, I don't like how I do that. And that's your bull flag right there. And oh, you're not gonna understand.
Tamagotchi.
Huh? So this is a bull flag pattern right here. You get a pole, and you get some consolidation, right? Just rank. It's consolidation, but it's also ranging, right? Remember when we were talking about consolidation, I was saying you could trade the range. That's ranging. That's the breakout. The way you want to trade a bull flag, you don't. I'm aggressive, so I could take it from support and just go to breaking out, or just take my profits at resistance. But the proper way to trade this is for your candles to break over your trend line, right, at the high of it, and then taking it. There goes another example right here as well. You see how and this is perfect because some people would have just been like, no, this is just the pole right here. This is your whole pole. This is a run up, and now it's flagging, and now it's breaking out, right? Just like right here, you see, this is your whole pole. This is your flag, and this is your breakout, right? Now that I showed it to you like that, hold on. So a bear flag is the opposite of this.
Tamagotchi.
A bear flag is literally the opposite. The pole goes down, it ranges, and then it breaks back down, right? What's his name? Jordan was killing Spy with a whole bunch of bear flags. Boy, Jesus, I'm gonna have to read all that shit. All right, so bear flags. This is a bullish flag right here. You can see it perfectly now.
Yep. Thank you. Yeah.
So this is a bull flag right here. I'll just keep drawing them out so you can see. When you see bull flags, they normally keep doing it. I'm not gonna draw them perfect. I'm gonna just draw them out so you can see them, and then I'll give you one little quick tip about bull flags. You see how it just keeps bull flagging, consolidation, bull flagging. I'm gonna give you that shit. Let's go find some bear flags. Oh, flag, breakout. It broke to the top instead of going back to the bottom. Bear flag. I want to find a bear flag that breaks to the bottom because I'm showing you bull flags that keep breaking up. Oh, there's a whole bunch right here from Moody. This one doesn't break down to the bottom though. We're gonna have to find them coming from highs. That's how it's gonna happen. See? How do I know that? Look, I'm just drawing a whole bunch of them. Breaks back out, get out, no more bear flags. Right here, bear flag, huge one. Are you seeing the pattern? How I had to find bear flags at the top going back down. You see how they keep flat, and there's more patterns in this.
Mm-hmm.
More patterns. I won't even draw that one, but you could. It's just I just see them. Look, there's one right here. Breakout to the top. This is another one that actually broke down to the bottom. It just retested and broke back down to the bottom. And then you can see like shoulder, head, shoulder, right? Shoulder. Let me delete it. Dang, hold on. Where was you? Nah, that's not a head, shoulders. Then that's why it's good to draw on your chart, because then you start seeing things. But yeah, I'm gonna go through this and I'm gonna go through these charts and get off. Cause bro, close it out. Good night. Good night, everyone. Yeah, bro. So I guess this is what we do in MSC. We make people get the hell off the chart class. All right, cool. Thank you, everybody that's still on. Wow, I appreciate y'all. Like, dang, it's really about to. I didn't even notice the time for real. But I appreciate the 45 people that is still in here. Bumblebee.
Yeah, bro, we in here, bro. Barely, bro. Surviving, but
yeah, absolutely.
We got a big day tomorrow. Big facts.
Oh, Lauren in here too. Stop playing. We got the whole support team. Bean Garden in here too. Stop playing with them.
We got a party.
Thank you so much, Moody.
Yeah, no problem. Thank you. I appreciate y'all.
Yeah, thanks, Moody. Great
Get
job.
some rest.
Yep.
Yeah.
Thank you.
Yep. Because we're running this thing back.
Yeah, great. I appreciate it. Yeah, man. Drop some feedback in the general chat for your boy. Just let me know how bad I did or how good I did. Let me know if y'all learning or if y'all not learning. Moody, go shower. Oh, I'll take showers now.
We learning, man. We learning.
Moody, go feed your dog. This guy, nah.
Good night, everyone.
All right, good night. Peace out.
She said you, Decay and
Welcome, appreciate it. All feedbacks, drop them in the Discord. Drop them in the Discord. Go drop a testimonial. Go tell me, I don't know, go tell me something nice. Make me I don't know. Make me want to put out a whole bunch of trades tomorrow. I don't know. But I really do appreciate y'all. Thank y'all for trusting MSC with y'all process. Please continue to ask questions. As well, you know, you have these free dope chart classes, but you also have some free courses with MSC with Martin's Investments, and as well just DM him and let's get it. I don't know. This guy.
I got feedback.
Oh, what's the feedback? I need that.
I got feedback. It was really from the members, people in the chat. They were saying that, I mean, besides like, you know, all the good stuff, blah, 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 you know, was that you started going real fast and it was just like moving from here to here to here. And now we're on bull flags and now we're on this and now we're on these candles and now we're over here on this thing. And they were like, whoa, it's a beginner class for beginners, like beginner, like, bro, what's a candle? What you went over? But then you have people joining in and they're like, what's support and resistance? Why are you putting lines right there?
Yeah, but they gotta, you also gotta wait. Like I gotta formulate the class better than I guess I gotta talk about support and resistance first. Because it's like once I start drawing something, I see where you're coming from though. I gotta rewatch this video and just see where I could get better at.
I'd say just even if you're doing like, because obviously you can't keep repeating the same thing because people are joining and leaving and joining and leaving.